Over the past 2 years, we have endured one of the most challenging chapters in Israel's history. The people and businesses of Israel have shown remarkable strength, unity, and unbreakable spirit.
This initiative has led to so many people joining the industry here in Israel. To see the Israeli investment community here is absolutely fantastic.
I'm truly looking forward to seeing each of you throughout the day, sharing ideas, forging partnerships, and continuing to build a vibrant future for the Israel hedge fund community.
People all over the world were completely amazed to see the social and business resilience of all of our people, the way they executed in the past 2 years.
I would like to thank you for all your support and actions. Thank you very much.
3, 2, 1. The market is open.
Good morning again, and welcome to the 12th Annual Conference of the Israel Hedge Fund Association. I'm Natalie Raz, CEO of the association for the past 3 years. We are gathering here today at the edge of a challenging time for our nation, marked by uncertainty, pain, and struggle, but also by hope. During the last 2 years, the Israeli people, together with the Israeli capital market, have proven their resilience and the commitment of its players to continue operating, investing, and innovating. The Israeli hedge fund industry, which is the focus of today's conference, is a vital part of this resilience. Hedge funds bring diversification and stability. They strengthen the capital market by increasing liquidity and tradability, supporting small and mid-sized companies, and most importantly, serving as a buffer against extreme volatility, thanks to their unique internal hedging mechanisms. Our local hedge fund industry is growing, maturing, and gaining traction as a significant player in the local economy. As of the second half of 2025, there are around 320 hedge funds that operate in Israel, managing a total of approximately $24 billion in assets. In the past year, we have seen growing interest in Israeli hedge funds, both from local and global investors, a clear signal of sustained confidence in our capital market and the industry. We, as an association, with the help of a local as well as global hedge fund professionals, are pushing to develop the local industry and make it to the next level, not only through AUM growth, but also through professionalism and best practice. Our goal is to make the local industry truly global and develop it with local talent, but also with global talent who wish to make aliyah and make Israel a home for their family and for their hedge fund businesses. Over the past year, the association has continued its work in 2 main levels. 1, professional development through seminars, webinars, and expanding the toolkit available to our community. And regulatory constraints. We have worked closely with the tax authority, the capital market authority, and the securities authority to promote a regulatory environment that is both responsible and flexible, encouraging innovation and growth. I'm excited to open today's conference. Throughout the day, you'll hear from leading voices from both the local and global hedge fund industries, alongside institutional investors, family offices, brokers, and banks, sharing insights, perspectives on capital markets in Israel and worldwide. This year's conference continues to embrace the values of giving and community. After enjoying the wonderful band at the opening bell ceremony, you are invited to enjoy the wine and flowers featured throughout the event, all created by businesses that include and support people with disabilities and special needs. With that, we are very proud of it. And now, I would like to thank our partners, the Tel Aviv Stock Exchange, for a long-standing and fruitful partnership, the members of our board, the conference committee, and everyone involved in organizing today's event. Jeffries, one of the association founding partners, for your ongoing support and significant contribution to the Israeli economy, especially over the past 2 years. Thank you. And of course, all of our sponsors, and last but not least, I would also special thank you to all of our sponsors. This conference possible every year after year. Okay, thanks. And last but not least, I also want to extend a special thank you to the member of our association, hedge funds, and our dedicated service providers for their continued support throughout the years, for sharing the knowledge and expertise, and for the strong sense of mutual responsibility that strengthens our community and drives our sector forward. Thank you for choosing to be here today. I wish you all a productive and meaningful conference. And now, I am honored to invite Professor Amir Yaron, Governor of the Bank of Israel, to present an overview of Israeli economy in these challenging times. Thank you.
I'm very glad to be here. This is a very important set of people, and hedge funds are a growing part of the Israeli ecosystem. They are obviously a very, very large and important part of the global ecosystem, and they're very important for financial markets. What I plan to speak about today is about the Israeli economy, how we enter the war, what's our current situation, what has transpired through the war, and kind of a few issues of where are we going from here, what are the challenges, there are challenges, and finally, given this particular set of audience, I want to speak a little bit about what I think is kind of a potential inflection point in the Israeli financial ecosystem or landscape, which the Bank of Israel is one of the major leaders in changing the landscape, making it much more global and much more advanced. So I'll leave that kind of to the end. So this is kind of a lot of the key takeaways, but before you read or look at it, I would say, as was appropriately said, Israel entered the 7th of October in a very good situation economically. We contracted one of the least in COVID, and we grew immensely after COVID, over 9% and over 6%. I'll say more about that. Now, the war has cost us. It's cost us obviously in lives and many, many, many things. But if you looked from an economic perspective, we are currently, at least until Sunday, where the next NIPA, National Income and Product Accounts, will come out. The ones we have right now are for the second quarter. We are at 5% away from where we would have been in terms of GDP relative to prior to the war. So that's one measure which describes a very costly cost of the war. But what I want to say is that if you take a broader perspective, and I kind of resonate with the word resilience here, if you take a broader perspective and you think about, you know, an awful event that is 30 times 9/11, 2 years of a war that also had a lot of, let's put it in a benign word, heterogeneous opinions about, okay? Israel has, the Israeli people and the Israeli economy have demonstrated immense resiliency. I go all around the world, meet the very top people from the finance industry, and they all question, what's the catch? And we have managed, in many ways, to have normalized an unnormal situation. Everybody here that's in Israel knows there is a missile from Yemen. People go to the bunker room for 15 minutes, and 15 minutes later, they're on the beach, they're on the restaurant, and they're in the workplace. That agility and dynamism of the Israeli economy has what has facilitated, you know, the fact that the economy has continued to grow and sort of function under, given these circumstances, in an amazing, remarkable way. The Israeli economy after the war has seen a huge spike in its risk premium. But since 3 distinct events, the beepers, the campaign vis-a-vis Iran, and the ceasefire, we've seen risk premia come down immensely. They're still above where we were prior to the war, but they're in a different zip code altogether right now. And for me, the risk premia is a major issue of how we go forward. I'll say something, since everybody's talking about interest rate, I will keep that for my segment about inflation and monetary policy, but clearly we've seen some encouraging numbers in the last couple of readings. And I'll talk more about the issues of innovation. We have to deal with budget, and the budget is a major issue. The government over these 2 years, I would give myself backhanded patting on the back, in the sense that they did listen to the Bank of Israel and did do 2 major fiscal adjustments that were very, very important in keeping markets' confidence at the Israeli economy, that debt to GDP is not just diverging upward. So let's get going. So this slide is one slide that tells it all, not all, but tells a lot about the Israeli economy prior to the war. You could see the small contraction in COVID, and then absolutely very large numbers, over 9 and over 6% in 21-22. We're on the way to be around 4% in 23. Very tight labor market on the top right-hand side. The bottom left is our debt to GDP. We were at some point close to 100%, went down to 60% prior to COVID. We used that fiscal space, and when I'll get back and I'll talk about the importance of regenerating fiscal space, it's exactly those events. COVID, we used that fiscal space. We went up to about 72. By the way, in Israel, both in 2001, when the dot-com blew with the second intifada together, that was the biggest drop in GDP per capita in Israel's recent history, okay? And in the 2008, there were no fiscal support by the government. I remember talking to the prime minister, and I said, you know, we need to do fiscal support, and we did that. And then you see 2 years later, we were down to 60%. And on the bottom right, inflation was going to go into the target, which is between 1 and 3% in Q1 24. When I would talk to Chairman Powell or President Christine Lagarde, we were a poster child back then, okay? And then came the 7th of October. So first of all, from what you see in red are different security events. And you could see Israel tends to bounce back very well out of these security events. That's one outcome of this picture. The second one is that you see the swords of iron war there at the very right-hand side is of different orders of magnitude. Okay, it's minus 21% in the first quarter of the war, in other words, Q4 23. But then you could see 1 quarter into the war, we bounced back at around 14%, around 15% GDP rose back. And since then, we've been hovering at different rates depending on the geopolitical events. So again, this is a little bit of the dynamism that I've talked about the Israeli economy. So the right-hand side of this picture, the green part, this is what I mentioned. You see the gap between the solid green, which is where GDP is right now, versus the dotted line where GDP would have been had the war not happened. That's that 5%. And obviously, the whole area under this is even larger than that. But on the left-hand side, this is credit card spending. And what you see is immediately when the war erupted, credit card spending naturally went down by 30%, okay? But then afterwards, you could see people went back to restaurants, actually quite faster than we've even expected. I'll say something about that down the road. And then the second V is the campaign vis-a-vis Iran. And then you could see credit card spending is above trend. And this is part of the strength of the Israeli economy. In the middle, you see unemployment. These are the different colors represents different things. The solid gray is the usual unemployment level. The dotted gray is what in Israel we call chalat, which is the way we've dealt in COVID with people temporarily laid off, and then the government pays furloughs. The solid teal above it is the reserves. And what's very, very important in terms of forecasting, which we understand now, we didn't fully understand it back then, is the top in October 2023, there's another area there which represents people who just stayed at home with their kids given that the education system was closed while missiles were still running around. And that was a big issue for us in trying to forecast, for example, what would have happened if Hezbollah's missiles would hit a bigger part of Israel. And then you could see reserves kind of going up and down depending on the various geopolitical events. But overall, unemployment, as you could see, is relatively low. It's about 3%. So I want to make the following argument. Why is Israel's GDP 5% below where it would have been? You could think of, you don't need to take pictures. We will give you all the slides. They're available. You can take pictures of me if you want to, but you know, they'll be posted on the bank's website. This is a public lecture. They're there, okay? So, so I want to take your attention from an economic perspective. Why would you potentially not produce what you potentially could? One argument is shortage of labor. The second argument is shortage of intermediate goods. So think of cement from Turkey, okay? And the third argument is credit, lack of credit. And the argument I want to make is that the reason we are seeing Israel so far being not meeting its or being below its potential output, it's primarily, if not all, because of this uncertainty and the labor shortage. We don't, in a second I'll show you that. Labor market is very tight. We're missing workers. The intermediate goods story is not there, and the credit story is not there, okay? So that's kind of the next couple of slides. So here you see vacancies over unemployment. When it's above 1, we call it a very tight labor market. When on the left-hand side, you see wages. So wages rise almost 5% kind of year to year on a yearly basis for the private sector. We don't think that's a wage price spiral, but it's a hefty rise. Here are the vacancies by different areas. Not surprisingly, who are we missing? We're missing people that are on reserve duty, and we're missing Palestinian workers. Palestinian workers have dominated the construction industry. Not surprisingly, you could see vacancy rates in construction and in accommodation and food. The blue and the red there are very high, still very high, but they're also high in industry and other places. On the left-hand side, you see the foreign workers that were in Israel. They've dropped and slowly are coming back. And in the middle, you see the reserves. Obviously, they were very, very large at the beginning of the war. And then in the middle, spiked again when the campaign in Lebanon and a few other spikes down the road. So that's very obvious in the labor market. What about the, we have surveys to CFOs and CEOs. Do you see a major constraint, limitation on equipment and raw material? And if you look on the right-hand side, you basically, at the beginning you saw something, but you don't see anything substantially different than prior to the war. The war is the gray area. And then the same is true about questions in the middle about credit. You don't see people reporting, okay, severe credit constraints. And on the left-hand side, you see that credit has grown almost exponentially during this period. So the major story is it's a labor shortage, and labor shortage also affects inflation. And I'll talk about that down the road. Other signs of the Israeli economy doing well, because this is, numbers are kind of difficult during the war. Taxes. Taxes are coming in at a very high rate, and you could see in almost all area, whether it's indirect or direct taxes, they are above trend. That's what these lines are all about. A little bit about the construction industry. So first you could see in green, that's the Palestinian workers. You could see they're missing. They've been somewhat replaced by Israeli and foreign workers. What has happened in this industry at the beginning of the war, essentially a shutdown. In the middle, you see construction starts or building starts and building completion. But since then, you could see in red the big spike in building starts since then. Now, the right-hand side is the prices of houses, especially the dark solid line. And what you see is that after we've raised rates, prices have started to come down. But then the first lesson of economics, which is a self-fulfilling prophecy lesson, many Israelis have figured out in around the beginning of 2024, after the first hostage release, oh, this is not going to take so long, but Palestinian workers are not there. Construction supply is diminished significantly. What I remember from Econ 101, that means prices will go up. Let me run and front run that price and go and buy a house. If enough people do that, that becomes a self-fulfilling prophecy of house prices going up, and that's what you are seeing, that wave of prices going up. And now we are in a buyer. Now we are more in a buyer's market because of the other beliefs, and there's a little bit of a self-fulfilling prophecy there. We're in the stock exchange. I have to talk about the Israeli stock exchange. So what you're seeing here is comparing, basically, let's just talk about the S&P, which is kind of in red, versus Tel Aviv 35. So Tel Aviv 35 underperformed the US stock market for quite a while, but then you could see, since the beepers, you could see the slope of the dark blue. You could see the Israeli stock market starting to take off. A little bit of a halt around the world around Liberation Day, and then a rising lion operation, the campaign, and you could see the slope even sharpens. And the Israeli stock market year to date has definitely done better than other stock markets. This same idea shows in the CDS market. You could see on the left-hand side, this is the CDS of Israeli dollar-denominated bonds. Amazingly, what you see at the beginning, the Israeli CDS, the light blue coincides with the red, which is US CDS, okay? And then it spiked up from about 50. It was actually even lower than that at the beginning of 2023, spiked up to about 150, went farther up with the various events with Iran. But again, since the beepers, you see it slide down, and then another slide after the Rising Lion operation, and then again towards the ceasefire. So as you could see, it's still above, it's hovering around 70, okay? And this is very, very important. The shekel. So what you see in blue here is the shekel dollar. What you see in green is NASDAQ, and in orange is a very primitive shekel model. What would the shekel be based on NASDAQ? Now you ask, why would you base that on NASDAQ? There are two kind of fundamental reasons. One is low frequency. When NASDAQ, or in particular when NASDAQ does well, there's a lot of high-tech money coming to Israel, and that improves, that strengthens the shekel. But Israel is also very paternalistic about pensions, and the institutional investment houses in Israel have a lot of money which is too large for the Israeli economy, and they invest it abroad. And when the S&P or NASDAQ does well and there's capital gains, they reshuffle some of those capital gains back to the shekel, and vice versa. When there are losses, they need to post margins. And so that creates a high-frequency correlation between the two. And indeed, you see that until the beginning of 2023, the orange line and the blue line, even though it's a relatively primitive model, coincide. But then, after that, there is a wedge when all the issues around the judicial changes have erupted, and the shekel has depreciated significantly. I remember Friday, October 6th, 11 p.m. Israel time, 4 p.m. New York time, okay? The shekel was at 386, and then you could see that additional spike. I'll come back to that. The shekel moved from 386 to 408 during the war, and then a month and a half into the war, it kind of subsided to the region between 3.6 and 3.7, and again, coincide with the stock market and the CDS. As you see, the shekel has appreciated again with those major events that I've shown. What you're seeing on the right-hand side is the correlation between the shekel and NASDAQ. You could see those correlations were high. That relationship disappeared in 23 and 24, and then it's now has resumed back. I want to say a few words about what we did here in the Bank of Israel at the beginning of the war, because I think it was very important. And it's important to understand that we are here. So the 7th of October, still shooting around at nighttime, I have to decide whether the stock market opens and whether the banks are open, whether we call it, whether it's a business day. We have a protocol for that. It was a hard decision, but we decided it was important to open all these things in Israel, and ex post, it was a signaling, and it was important to do that, and we did that. October 8th, Sunday, there's no FX trading, okay? But we've already understood that there's likely to be a pretty large depreciation of the shekel on October 9th, which is a Monday. And before trading, we announced for the first modern time in Israel that we are going to utilize our over $200 billion of reserves, which is a major asset of strength of the Israeli economy. And what was important about, conceptually about it, let's say as opposed to other central banks who say, we are going to defend, let's say, 4 shekels per dollar, we said, we kind of use something that I would like to term QEFX, in the sense that we said we're going to sell up to $30 billion of reserves, we're going to supply up to $15 of swap transactions. And the idea was, we're not defending a particular rate, but we want to make sure that markets function in an orderly fashion. And that jump from 386 to 408, that was very, very important. It was done in an orderly fashion. And that, to me, was a major event because that provided certainty and calmness also to this Israeli stock exchange and to the Israeli bond market. And that was a major issue. So that's October 9th. October 13th, I had all the CEOs of all the banks in Israel in my office. What do you do with a bunch of people who ran out of Otef Aza with their pajamas in a state of shock? What do you do with a whole bunch of people who took their military kit bag and ran to the front line? They have mortgages, they have consumer loans, small, medium enterprises, etc. What we agreed on, and it tells you a little bit the state of mind back then, that these payments would be deferred for 3 months. Payments would be deferred to be paid, no commission, no interest. A year later, beginning a year later, that particular plan was extended after that 3 more times for a year, included also the people that were evacuated in the north. That was very, very important because that was a very targeted relief. Now, so that's October 13th. Maybe October 22nd, we had our first interest rate decision since the beginning of the war, and it happened to be one with a forecast. We were kind of contemplating, should we do a forecast or not, given the state of uncertainty. We did. We said the Israeli economy would grow at 2%. We turned it, even the good guys, it happens sometimes, and it turned out to be exactly 2%. Okay? But it was a very important number back then because the numbers were, there were numbers flying around, -10, et cetera, et cetera. But the reason I'm mentioning that interest rate decision, because everybody and the media became Keynesian on me. Everybody said the governor has to lower interest rate, okay? And no, risk premia was sky high. The shekel had depreciated. So the fact that we could, at some level, control and do what we need to do in the FX market, on the one hand, and on the other hand, provide that targeted relief to those people I just mentioned, and keep the interest rate at bay, that was an important set of moves, and that's what allowed us to do all these things and at the same time help these particular people. I want to say something, since we have a lot of people here who, from abroad and also from Israel, about the locomotive engine of the Israeli economy. That is clearly the high-tech industry. This one slide tells you all. And you could see how important it is. Over 1/3 of taxes, over 50% of exports, 16% of employees. Israel has the highest R&D investment per GDP relative to the world, and it's mostly private. You could see in orange. We did in COVID, and even now in the war, it was very important for me that in the budget, we actually enhanced the Innovation Authority to make sure we do not lose the cohorts of super pre-seed young ones, because those who have already funded have their channels of continuation of funding. This is why you could say, if we talk about funding, you could see in blue on the left, the capital raised as a percentage of GDP in Israel is immense relative to other countries. You could see in red, it's the US. I used to have Europe here, but I decided it was too embarrassing to put them there, so I dropped that, okay? In 21 and 22, I had so obviously, let me just say this. You could see on the right-hand side, that's the most important message to the people here. VC money is back in Israel, okay? You could see the numbers on the last 2 quarters is very, very large. It's kind of reaching above 5 billion per quarter. And after it dropped sort of into the first quarter of 2024. Since then, we've seen numbers basically growing. I've seen a lot of investors, people come and talk to me, and that is very, very important. And you could see that in the middle. It's not quite 21 and 22. In 21, 22 was just almost abnormal years. I remember I had Ruth Porat in my office back then. She was the CFO of Google. Now she's the CEO of Google. And I said, Ruth, every little two kids are coming in with a PowerPoint presentation and are getting frothy money. And she said, Governor, you're absolutely right, but it's not PowerPoint, it's Google Docs. So we're not there, but we are, this is very important, these last two numbers. Why is the Israeli high-tech so resilient? And it's much more resilient now, I believe, and it has shown its resiliency relative to 2001. In 2001, this was an industry that was primarily in telecom, dream companies without a product. Right now, you could see in this pie chart, it is a very well-diversified industry. Everybody knows how good we are in cyber, but we are excellent in medtech, obviously in fintech. The orange there that says other has underneath it a lot of defense tech, which I don't need to tell you, the whole world is enhancing their investment in defense tech. The top part, agro-tech, and over 60% of them have some kind of product. So it's a much more resilient. This is a graph, this is the first time I'm showing it. It's important to know a lot of the capital has been raised, has been by larger funding rounds among more mature companies. And on the right-hand side, what's important is a lot of people talk, where is Israel in terms of the AI space? You could see a lot of these investments and capital raised is associated with the deep tech companies, and that's important. Maybe a word about inflation. I am the governor of a bank, after all. The current CPI number is 2.5%. You could see that throughout this period, Israel has generally been, the blue line has been towards the bottom of the OECD. But since the war has happened, and roughly since after the first quarter of 2024, those labor constraints that I mentioned, that shortage of supply, plus a bunch of other things, have created pressure on inflation. All right? So this is just micro 101. If demand is solid, okay, and the labor supply curve is moving inward, in other words, there's less of it, we'll see less quantity and higher prices. And that's what we've seen. We have seen the last CPI was an encouraging CPI. It was kind of below what at least the market had expected. I would say, and this is the current, I'm not showing the internal numbers from the banks, but this is the average of 14 professional forecasters in Israel. So it's supposed to be around 2.5 for the first couple of readings. This is after this adjustment after the last CPI. Before that, it was edging again up to the 3%. I would say fundamentally, there are several factors that are affecting inflation forward. One is appreciation of the shekel. The other one is the release of reserves. The more we release reserves, that labor constraint is being mitigated. Those help basically dampen inflation. On the other side, and you mentioned it, there's vapors of optimism in the air. Those vapors of optimism can also shift the demand curve, the demand and activity in the economy. And we are looking for that balancing act between those two things, and which one will move at what phase is kind of important to see. I think at the end, Friday, there's the next CPI, and Sunday, there's the next reading of the national income and product accounts of Israel. That will give us some headline how hot we think internally. There's the third quarter was a solid plus, I would say, economic activity, but we want to see certainly where those numbers come in to really understand those factors that I mentioned. In spite of seeing these encouraging numbers, it's important for us to see also where are the processes going in terms of inflation going forward as we move on towards the next interest rate decision for us. I want to say something about budget. This is the cost of the war as we see it. You could see it's primarily defense, but obviously compensation for tkuma, compensation for other things, higher interest payments. And I would say the major issue for Israel is what I call the fiscal trilemma. On the one hand, we are not the US, we're not other countries. We have more extreme events happening around us at a higher rate. And so therefore, our job is to show and to have to demonstrate fiscal responsibility all along. And for me, that means that debt to GDP ultimately has to come down back to where it was, around 60%. So that's one side. The other side at the top, you could see the defense expenditures of Israel are large relative to, as percentage of GDP, were the highest. And at the same time, everyone knows here the roads, infrastructure, metro is missing. Education system, I'll talk more about that, needs investments. So we need, so we need civilian, public expenditure is low, defense is high, and we have those needs, and yet we want debt not to rise. I do want to say what has happened in the 24 and 25 budget, because it's important. And I've met analysts and investors all around the world throughout these 2 years. And the government did two major fiscal adjustments. It was okay for us to allow debt to GDP to rise during the war. It's natural. But at any one of those points in 24, and given the basic assumption of when the war will end in 24, we did fiscal adjustment on the order of 1% of GDP. And then came 2025 budget. The war had lengthened, more expenses have piled up. And again, against the basic assumptions, there was another set of fiscal adjustment on the order of 1.5% of GDP. Many of you know the VAT tax, the freezing of income tax brackets, healthcare. So those are painful things. But those things have demonstrated to the outside world we use what I call the inverted U-shape process for debt to GDP. Yes, it went up, but there was a credible process for it to come down. And that brings me to date. Now we have the ceasefire. It's the time to basically enact that downward sloping part of debt to GDP. Okay? And in order to do that, the deficit for 2026, so we need to do it starting in 2026, and it has to be a process for several years. And in order to do that, that implies we need to be in the low 3% in terms of deficit. Okay, that's number one. Number two, we need to tilt money and budget into growth engines, more metro, more education, growth engines. And all of that will critically depend on the defense budget, all right? Whether we, and that is a decision, obviously, that has to be formalized by the Prime Minister and other ministers, how much, given the new geopolitical events, how much can that budget be relative to the high numbers it was in the last 2 years. But this is what's needed in order to be at that lower, kind of low 3% down the road. I'll say a few things about the long-term challenges, because Israel, in spite of me giving its high praises for its dynamism, its resiliency, this one slide tells you all. In oranges are different OECD countries. In blue, it's Israel. Everything is normalized to 0. So on the left, you see public capital to GDP. That's that infrastructure. And you could see that Israel is several standard deviation below. We are high on poverty. We don't, in spite of huge productivity at the high-tech sector, on average, we are below. That's the third middle column. And then as a former professor, I would say the devastating part is that Israel has low skills. We do not do well, okay, on international exams. These are PIAC and PISA are different exams. And on the right-hand side, this is pretty much true on every decile you look at. There's a huge skill gap between Israel. It's not just Arabs, it's not just ultra-Orthodox, it's in many places. But if I do mention the ultra-Orthodox, one cannot avoid talking about demographics, which are, you know, they're an economic thing that just ticks and comes around. What you see here on the left-hand side in orange is the Arab population. Basically, it's going to stay stable at the low 20s. The gray is the projections for the ultra-Orthodox population, and you could see how it's doubling down. By 2060, every other kid will be in first grade will be an ultra-Orthodox kid if this continues. Moreover, you could see that ultra-Orthodox and female Arabs, but as I mentioned, Arabs are going to be a stable part of the society, have very low participation in the labor market, and they earn low wages. We need them in the job market, okay? That requires for them to come in and make money. That requires them to study core studies, okay? This is something the government has kicked the can down the road too long. The more we kick the can down the road, the harsher, the more painful the adjustment is going to be. It's a social, political issue, but as I mentioned, it has huge political implication. Before I go on, and my last words about the financial, I would say, in principle, the participation in the labor market is a conceptually different issue than being drafted into the military. And being drafted into the military, if you take the Ministry of Defense numbers, as we're going to go into a new steady state, even with the ceasefire, there's going to be more reserve days for the average person who's under the burden of serving. That in itself is 0.5% of GDP every year, according to our estimate. So although these things are in principle very, very different, the idea is that if they are drafted, they'll also be able to gain skills there, and they'll also be able to join the labor market, and this is very, very important going forward. It's not going to affect your investment in the next couple of years, but this is something that Israel has to tackle, and the sooner it tackles it, the less painful the adjustment will be. So we are in a hedge fund conference, and I'll close my words by say something about the innovation in Israel's financial markets. I would say Israel's landscape or ecosystem is more the right words. So in green, there's a whole bunch of things that we've already done. There's 2 new digital banks. We're creating now a tiered banking system, so there's going to be small, medium, and large with different regulatory burden. The idea is that some of the credit card companies, perhaps, and maybe other NBFIs, non-bank financial institutions, who have already a lot of clients, can come in and become a small bank. We promoted open banking, which is very important. We took the risk. Not many central banks have done it, and we've connected many of the fintechs directly to the RTGS, real-time gross settlements in the Israeli banks, and therefore can work directly. Two major other things that are at the work, they're not done, but they're at the working stages. A is a true IBOR market in Israel. Okay, right now the shekel overnight interest rate is based on the Bank of Israel's rate. We want to make the IBOR market a true repo and IBOR placed market. That requires the accountant general to have less footing in the loans market, and we're doing that process. We've created, I've worked on it for over 5 years or so, securitization law in Israel. That's very, very important. I can tell you S&P is already doing ratings on mortgages, etc. It passed the first round in the Knesset, okay? And it needs to pass the next 2 rounds. It's very important. Every modern economy has that, and we worked on that. We have a good law here, and this is something I've been driving all along in the Bank of Israel. The last thing there, and we are in the right place, shifting Tel Aviv Stock Exchange from Sunday, Thursday to Monday, Friday. So I've learned all the rabbinical rules about what's the shortest day on a Friday, etc. We worked it out. It's going to start on January 26th. And the idea is, the hope is that, and we have a lot of friends around the world, is to actually, that will hopefully facilitate the stock exchange to be listed on a more global index, and that should bring in institutional money by construction, making the stock exchange deeper, liquid, and more liquid. That's very, very important. A few things on the right-hand side. We're working, all the central banks are working on cross-border and faster payments. This should make it cheaper for both companies and households to bring money across the border. So for example, those of you who know Revolut, the company, they're starting as a payment company. Hopefully they might might become a bank. The issue of stable coins, which you hear all about that around the world. There's also an Israeli law that's being formed around that. The issue of tokenized assets, I don't have the bankers here, but those of you who were in my speech to the banking industry, I said they need to harness this technology. Tokenized assets and distributed ledger is the modern era for all financial markets. Larry Fink, who's my friend, I think a couple of days or so, we are going to tokenize every financial assets. Those of you, companies like Apollo and KKR, for example, are trying to tokenize even private equity, which is kind of, you can imagine. These are very, very important things. They're going to make KYC, AML. If it's on a ledger, everybody can see that. Transactions can happen simultaneously. If you're a trader and things are tokenized, collateral passes a lot faster, okay? And so that will change things, and it's very, very important. In the background, obviously, although these are very important technologies, we at the central banks are also progressing. We haven't made any decision, but you can be sure that we are at the frontier among the central banks that are also working, if we do want to make a decision to have a central bank digital currency, a digital shekel, we are also working on that, and part of it will be determined on how we see the markets dealing with some of these technology, and whether the market, complements or substitute for that. Either way, it is very, very important to understand technology is here. You cannot avoid it. You need to harness and use it. Okay? We have to do it in a way that is responsible, that doesn't create fragility. We all understand it brings about more risks, but we need to harness it in order to improve the system. So these are the key takeaways. They are the same as I mentioned before, and if I was to say again, we've endured a costly war, but I think when you put on the right lenses, you see an Israeli economy and Israeli people who have demonstrated great resiliency. So I'll stop here. Thank you very much.
Hi and welcome. The next session, transforming Israel into a global financial center, vision and challenges. Please.
So we're going to start off with a bunch of questions that I'm going to ask Sender and Chagai. For those who don't know, Sender Cohen, when he left Wall Street as a research analyst, he then joined Soros and was a PM at Soros for a number of years, then left Soros to go with Stan Druckenmiller. Recently, Sender was running a $30 billion, he was the CIO of a $30 billion family office where he led all of the investment strategy. And recently, after the war, Sender founded a new firm called Cage 2, which he'll share with us the thesis behind that. Chagai Schreiber is the CIO of the Phoenix. In all the years that, in the 20 years that I've been here and interacting with the institutional capital markets, I believe that Chagai is probably the most forward-looking of all of the CIOs and has really transformed the Phoenix from what had been purely a insurance company to today is really a best-of-class global asset manager. And he thinks of his business as being a best-of-class global asset manager. So it's really our privilege to get insights from two what I believe to be leaders, not only in terms of how they think about the markets today, but where the markets are going. So why don't I start off with Sender. Why is now the time to truly build a hedge fund industry in Israel? What would success look like if you think about it 5 to 10 years from now?
So I'm going to start by not answering the question. The last time I was on the stage with Scott was in Riyadh 4 years ago. And I only speak publicly in the Middle East, either Tel Aviv or Riyadh. So I think there's Yitzrab is somewhere in the audience, and I've known Chagai and Yitz for, I don't know, and Lior, the whole crew, for 20 years or so. But if you ask Yitz, he'll tell you when I was director of research at Soros, then I headed external allocations there too, I'd always say when he'd bring this up, all things being equal, there are just better ways to do this in the United States. And post-October 7th, because of a variety of dynamics we'll talk about, which I think are culminating with some of the tax reforms here, that has shifted, where all things being equal, a lot of money can more easily find a home here than in the United States, partially because of what Chagai has trailblazed here, and also, again, because of some macro and micro dynamics that are occurring in this country. But that's the high level.
Chagai, there's been a lot of news lately. Minister Smotrich has gone in front of the Knesset with some new proposed laws. Do you want to talk what are the most significant legal and regulatory barriers that you think have prevented the hedge fund industry from really kind of flowering over the last number of years and why that's potential to change?
As an institutional investor, I'm not sure it is mainly related to us, those, I would say, discrimination of the hedge fund industry, and mainly taxation issues. We are net investors. We are not paying the tax. And for us, it will not be a huge change. But I think that the main driver for the next few years for the hedge fund industry is the retail clients, qualified investors, asset management, sophisticated asset management, like family offices, and for those kind of investors that should be more and more involved, there should be some changes in the regulatory space, mainly in the tax regime.
So, Sender, you have paid for lobbyists to spend endless amounts of time with the Ministry of Finance and the tax authorities. Those changes are about to happen. Tell me what your vision was for KH2 when you brought this to market, and what are your plans for this coming year for KH2?
Do you really believe it's going to happen?
Also, I didn't know I paid lobbyists.
When?
That's a new one to me, too. I got to check that.
No comment, huh?
Yeah, I think, you know, a few weeks ago, I was meeting in New York with some people from here and some people from New York with the heads of the prime brokerage business at three of the biggest trading counterparties there. And the number one point they all brought up was the tax regime in Israel just being inhospitable to a hedge fund industry, which it has been relative to the United States and others. And the great thing about the ministry now, the tax authority of the ministry, is they grasp the issue, they grasp what needs to happen, they grasp what's happened in the UAE and what should happen here. So I think you know, there's I don't know what caused the awakening now, but there's an awakening to what actually needs to change to make it a level playing field. I don't mean a 0% tax rate like you have in the UAE. Clearly, that's not going to happen here. In fact, one of our dreams is to help create a new tax base here. That's actually it's a very creative tax base, as I think everyone in this room knows, for so many reasons. More creative than the venture industry can possibly be. But you just have a confluence of factors that have created more of an openness to doing so.
Chagai, do you think that there is going to be a trend as you continue to investigate putting more money into the local hedge fund industry, that the other insurance companies will continue in your tracks?
I think that in previous conferences we have discussed a lot of the role of hedge funds for the institutional investors. It's not an asset class for us. It's an industry with very talented people, and we give, you know, checks that allows us to get some of those guys' brain and to discuss positions, ideas. Without it would not change the needle. Once you manage $100 billion, it doesn't really matter if you put 200, 300, $400 million in a hedge fund. In addition, I think that the hedge fund industry in Israel yet, maybe Sander will change it, is mainly tilted to it's actually long-only stock pickers. That's the main job of the hedge fund here. You know, we are anyhow long-only players or long players. When your exposure to equities in a pension fund is 55, 60% already, like it used to be 20%. Now it's 55%. It's like elsewhere in the world. So you will not hedge your portfolio by through hedge fund. You will not change dramatically your performance. You just pick the brain of those. But as I mentioned earlier, I think that the asset management space, and we in Phoenix, I have one hat as a CIO of the institutional investor, but I have another hat of an executive in Phoenix. We are looking to expand our expertise and involvement in the asset management space, and you will see some steps in the coming future. And we think that one of the products, and we want to be able to get the best service, the best products to retail investors, qualified, and up to the ultra high net worth individuals, and definitely hedge funds, and not only long tilted hedge funds are needed here. We need to expand the industry for more, I would say, credit funds, quant, special seats, and other.
There seems to be a cultural comfort level. I come from the world of venture capital. There seems to be a cultural comfort level that Israel has with technology. Maybe it stems from the fact that because we have such success in the build out of some of the technology units In the Army, there's a direct correlation between people leaving those technical units going into the private sector and high tech, the connection between venture capital and high tech. It seems like there's a cultural affinity. That affinity historically has not been there with hedge funds. Do you think that opportunity can actually change, Sender?
I do. I think so. So a few observations. Sorry, like I said, I never speak. So like, why would I hold that microphone to my face? So my kids go to a day school on the Upper West Side of Manhattan, and I was looking. At least 35% of the parents that I reckon, it's a small day school, 200 kids, but at least 35% of the parents work at the Jane Streets and the Shahs, et cetera, of the world, and they're Israelis that have come to America. In this country, you can count on one hand the number of great quant high-frequency trading shops. And, to Chagai's point about long short and hedge fund land, despite that, I will admit 2008 was the most fun year of my career, and I love shorting. That's just what I enjoy doing from working for Stan for so long. I'm not a big believer in shorting equities. It's just not. It's not what really what I find very interesting in hedge fund land. But one of the more fascinating areas in this country, which is just ripe for an explosion, is bringing that quantitative element into finance here. That for odd reasons that we could go into, it's cool, it's not cool, it's this, it's cultural, have not really come to the fore in the state of Israel. If you speak to the universities here, and we have, they'll tell you there are very few great jobs for people interested in quant and finance coming out of the universities here, which again is insane given everyone gets absorbed in New York and ends up a tuition-paying parent at Beit Rabban Day School on the West Side. But shifting that with the diaspora talent that now wants to move here post October 7th, I think creates a very ripe opportunity in the country.
Are you hearing about people interested in moving? And there's kind of like three components to building an ecosystem. There's let's call it the regulatory and tax regime. So there's the participation by the government. There's the educational aspect. There's a bit of a chicken and egg. Will money find talent if the talent is creating alpha, or does the alpha have to chase money regardless of kind of their performance is going to be very difficult? And then there's the private sector, the people who are actually putting capital to work. When you think about the three legs of the triangle, the talent pool is one which could be both generated domestically through long-term education in finance and financial engineering, or it could be exogenously stimulated through Aliyah. What's the talk? You frequent London, you frequent New York today. What's on the people's minds with regards to where they're standing right now?
So I will say more than anecdotally with a lot of conviction and date myself with a movie reference, this is a true if you build it, they will come. The amount of talent that wants to move here, exceptional talent that would move here, and with the right tax regime and the right structural framework and support, it just didn't exist prior to October 7th the way it does right now, particularly out of London and Paris for somewhat self-evident reasons, but also New York in a significant way. Goldman Sachs hosted a dinner for us, the head of PB there, and Yitz and Lior came to New York, and the people that came were just as blue chip as they come. In terms of that type of talent. But it really is a very, very changed atmosphere now where there's a great desire of highly talented people to move here.
And Chagai, with the amount of cash that is generated by the institutions because of the forced savings, et cetera, if the talent pool is here and the returns are here, do you believe that there's any limitation with regards to the institutions starting to support a local industry?
We are looking all the time for good talent, both to invest with and to recruit.
It must be difficult for you internally, correct? Because if I'm not mistaken, you have remuneration kind of caps.
Yes, but I think that we are. I'm always saying to my people, if someone just want to maximize his salary, so being to be in the institutional space is not for him. But I think that currently, the institutional market is where the whole economy, happens. When I open the newspaper in the morning, I know, everything, all the deals there. I know either I Either I'm there or I wanted to pass it. I'm telling my people that I don't want to see deals that I don't know about them. I want to see deals that I said yes and deals that I said no. So we need talent to work in the institutional space. We do have some tools to keep them work for longer, to make their duration longer with us. We have a lot of efforts to make them work with us. And we are looking for talent to invest with on the hedge fund space, on the private space, wherever.
Sender, the hedge fund industry has changed dramatically in the last 20 years, right? If you go from 25 years ago, the number of funds were much more numerous. People were stock pickers. People were generating alpha with fundamental. Today, the multi-strats have completely kind of changed the industry. How does that fit into the potential equation with regards to Israel? Is that a potential that the multi-strats will come here as well? Do you believe that Israel can succeed even if the multi-strats don't come? You want to comment about that trend a little bit?
Yeah, sure. So two things in that regard. There's the paradox of, the paradox of skill, but I'll call it the paradox of place. In New York, the multi-strats are all fighting each other. In Israel, there's just a bigger opportunity to find great talent where you don't have a dozen players all bidding on the same teams. So there's an interesting, we'll call it time or location arbitrage that exists here in terms of talent. The second comment I'll make in that regard, Scott and I have a friend here named Michael Weinberger, who was the head of equities at York forever. I don't know if he's out there somewhere, but we were talking with him about how when he was, I'll talk about, I'll embarrass him. He was, number one in his class at Harvard, tied, at Harvard Business School with the kid from McKinsey. And back then, the dean wanted to, be with the guy who's going to McKinsey because that was what was cool. It wasn't hedge funds that was cool. And now, obviously, the dean always they always say fade what Harvard Business School kids go to do. So I don't know if they're here right now, others, but you've seen a big shift there, and in terms of what talent goes into hedge funds, which makes it harder to find great talent in New York. But the reason I bring that up in this same conversation Scott and Michael and I had is, you think back to in the old days, the people who would get into stock picking, they felt it, called in their kishkas, people really loved stocks. And when you talk to small managers here where it's difficult to start a hedge fund, it's not cool, it's not something your mom wants to talk about. She wants to talk about you starting a startup. And you're in the stock picking business in Israel, it's the mindset to me when you talk to managers here and the way their eyes light up about stock picking that you had in the US in the 90s, where people genuinely loved the craft. They loved the art of it. They loved doing it. They weren't just doing it because they make $20 million a year. They were doing it because they really, really enjoyed stocks. And you see a lot more of that here, which is also quite interesting and exciting.
I think as the economy as the economy continues to need to expand, and I come from the venture world, and to a degree, I think that there's perhaps an inherent risk in the over-concentration of how we think about venture and its effects in Israel today. And I say that gently because Chagai happens to be an LP in our fund. We're going to continue to drive all the returns we've done historically. Don't worry about it. But as our asset class continues to grow, it's natural that there will potentially be squeeze on those profits. And that's not just here in Israel, that's on a global basis. If I just look at it on a pure mathematical or numbers basis, there's about $670 billion of assets in the venture ecosystem globally. There's 7.2 trillion of hedge fund assets globally. The vast majority of those hedge fund assets happen to be managed by people of the Jewish faith. So it instinctively makes no sense to me that the industry here shouldn't grow precipitously over the next couple of years. I will mention that, so Sender is being shy, but you've got Sender and KH2, which are raising funds to support both first-time managers that are looking to manage funds here, as well as to provide funds to established managers. And you've got Ron from Marble Bar out of London, which is doing a very, very similar thing, both providing not only the capital base to support the local ecosystem, but also to provide the regulatory kind of oversight so that international LPs can come. Question for you guys, when you think about global LPs, when they think about geopolitical risks, Sender, you spend a lot of time in the Gulf, Chagai, you interact now with all the global asset managers. Do you think that there's a geopolitical issue that they think about when allocating capital? Or is it really something where if people are delivering returns, capital will find them?
Yeah, I remember going to a dinner that a friend was having for a fund that, I won't say the name of the fund, but a very large hedge fund started by an old friend of mine from Soros days, a month after October 7th. And coming home after, and they had the Israeli mentalist, the guy who's always on the El Al flights. Thank you, you know, like entertaining in the front. And unfortunately, I was sitting in the front, so I was like afraid I'd get called on. But like, I remember getting home that night saying, if this were a university campus or I were out in Silicon Valley, there'd be yelling and screaming Israelis here. Wall Street's very different, as I think all of you know. It was just like a love fest for Israel, for this guy, questions to him afterwards about what was going on in Israel. It's just a long and short answer of no. I've seen zero issue in terms of allocators, investors, anything. In terms of putting capital work here, or you know, you risk adjust as you're trading, but same as you're allocating. But I've seen no hesitance. Quite the contrary. Going back to my all things being equal comment, there is more capital that wants to come here now, given the cultural and other dynamics of the industry and members of the tribe in the industry, than existed prior to October 7th.
By the way, I think that the last 2 years gave us a few examples about the geopolitical risk and how to look at it. And Amir Yaron mentioned earlier, you know, the beeper operation, the pagers operation, and by the way, the first ones to understand the situation that maybe there is, you know, maybe this operation is the start of the end, were the foreigners. You know, we were stuck here. It took us a while to understand whether it's a meaningful event or no, but the first one to buy Israeli shares in meaningful amounts were the foreigners. We had institutionals. We didn't sell when we didn't sell, and we didn't throw everything when time were tough. But we also were not very, I would say, active by buying after the pages operation. The first one, you know, we were in New York. We were getting calls. You know, it's a game changer. We are buying. So sometimes you don't things that you see from New York or from London, you don't see from Tel Aviv when it comes to your own geopolitical risk.
We're running out of time, so I'm going to ask you both one quick question. What does success look like if you both kind of take your vision 10 years forward? What does success in building a hedge fund industry in Israel look like 10 years from now?
I'll say there's zero reason that the assets managed out of this country should be less than the assets managed out of the United Arab Emirates. Zero reason in 10 years.
Chagai?
5.
I think it could easily be 5-fold bigger if what you were not commenting would happen, and it will be, I think, much broader in terms of the asset classes that it will be, that the hedge fund industry will be looking at. It will be quant, it will be crypto, it will be credit. We mentioned earlier also, Amir Yaron mentioned, the ETF process of private credit becomes part of the ETF space. It will bring the quant, the machines, all the technology to those spaces as well. And I can already see some first signs of those things happening.
In 1999, I led an investment in buying the Life Exchange, which was the second largest derivatives exchange in Europe at the time. When I got to Life, there were hundreds of mostly men kind of shouting in a pit with very colorful jackets and waving their arms like this, and that's how they transacted their business. Shortly after, those pits all shut down and everything was run out of giant server farms. The markets today are global and they're electronic, and there's no difference if you're sitting in Tel Aviv or if you're sitting in Tokyo or if you're sitting in New York with regards to being able to access these markets. So I believe, my hope is that Israel will be able to continue to expand, will continue to educate in terms of the expansion of the economy. This is an industry which is truly, truly limitless with regards to what the opportunity set, and is able to attract people because of the difference in terms of how a hedge fund acts. It's able to even attract people from the Arab sector, people from the Haredi sector, in a way to truly expand the economy. So to guys like Ron and guys like you, Sender, who are on the ground with capital to support the local economy, for me, a father of 5 boys, I thank you guys.
Maybe a regional stock exchange.
Exactly. And Chagai, I continue to applaud the leadership that you're taking in the market. Thanks, everybody.
Thank you.
Hi, I'm Ram Sheves from Valley Bank in New York. It's a pleasure to be here and to welcome you to the Global Equity Panel on Finding Alpha in Unexpected Places. Thank you, Natalie, for having us here and for organizing this awesome event. At Valley Bank, following Bank Leumi USA acquisition, we've become a unique bridge between the US banking expertise and the Israeli business ecosystem. Valley is over $60 billion banking assets, publicly traded company. We are a full-service bank with retail banking, private banking, commercial banking, and many other types of financial services in the United States. We are proudly work with more than 100 Israeli-related funds, delivering solution that makes a real difference. We can open account in 2 days. We can open account to any entity around the world, either US or foreign entities. We can provide hedging solutions. We can give credit facilities, either capital calls or umbrella facilities for any other utilization that the fund needs. And generally, our mission is simple: to help funds to operate in the United States, especially to the Israeli affiliated companies. Now, I'm honored to introduce today's distinguished panel. Lior Shimonovich, head of Israeli equity sales at Jefferies, will lead this panel. And the participants will be Nadav Zeller, managing partner at Sfera, Sam Vecht, head of emerging equities at BlackRock, Daniel Suk, head of global equities at Menorah Insurance Company, and Gilad Kaiser, head of global equities at Migdal Insurance Company. Together, they will share insight on how to uncover alpha in places others might overlook. Enjoy. Toda rabba.
Thank you, everyone, for joining. Sorry about that. Before we jump into the panel, I want to extend a very, very special thank you to Natalie, to Max, to the entire IHFA organization, and of course the Tays for lending us this building for the afternoon. Alongside the IHFA, Jefferies has been a co-founder and sponsor of the IHFA from very, very early on. We're very committed to Israel. We now have 14 people at Jefferies dedicated to Israel across banking, equities, fixed income, and wealth management. We opened up an office here in 2023 and have grown quite a bit since then. We recently hosted our Tech Trek, which featured the largest 90 public and private companies, 310 global investors, including names like Bill Ackman, Dan Loeb, Paul Singer, and many, many others. And a particularly proud and personally uplifting moment for us was immediately after October 7th, our CEO and our president, Rich Handler and Brian Friedman, decided to dedicate a trading day at Jefferies to Israeli aid organizations, and we helped raise $13.5 million. So I guess with that, I'll turn it over to our esteemed panelists, and maybe if each of you can introduce yourselves.
Thanks, Lior, and thank you for having me today. I'm Gilad Kaiser. I manage the global equity desk at Migdal Insurance, almost 3 years now. Prior to that, I've been working for BlackRock in Israel. Let Sam introduce this one. At Migdal, we manage roughly $500 billion shekels across all asset classes, if it's liquid and non-liquid. In my role, I try to generate alpha using equity investments across geographies and sectors. I see myself as a pragmatic investor. I mean, data and fundamentals always comes first, but we do look a lot on market timing and trying to understand the market sentiment and dynamics.
Hi, Sam Vack, BlackRock. Been there for the last 25 years, managing Cayman hedge fund, UCITS, 130/30 and a few other funds across emerging markets. I said long, short, emerging, frontier. Not sure exactly how I would view myself as an investor. Professional tourist, perhaps. Been to about 80 countries for the firm. But the great opportunities in emerging markets are generally where people aren't looking. So slightly contrarian.
Thanks. Hi, I'm Daniel Swoki. I currently manage the global equities at Menorah Pension Funds. In global equities alone, we're managing on our desk approximately $35 billion. Yeah, how do I define myself as an investor? I don't know if that was the question, but I'll answer it anyway. So yeah, I'm pretty much style agnostic, I would say. We try and find wherever there's value with a simple remit of beating the benchmark over time. So we'll go wherever we see opportunities. Yeah.
Nadav Zeller from Sfera, been at Sfera for the past 15 years. Currently managing Sfera Tech, which is a newly launched hedge fund that we started approximately 3 years ago with $250 million. Managed at the moment, basically we focus solely on tech and tech-related names, mainly in the global market, in the long-short strategy, and we employ a lot of research only on those certain and specific segments. And we like to do a lot of work, cover the different segments in the tech landscape and try to navigate them as best as possible.
I guess that's a good dovetail to our first question for you, Nadav. Something that's been on everybody's mind. Are we in an AI bubble? And if so, where are we in that cycle?
Okay, so that's probably used to be the $1 trillion question. It's been inflated as we speak. Now it's a 5 trillion question. So obviously, if we look at it, I think we need to start with the word bubble to begin with in order to answer it. So the way that I perceive it, you need to divide it to two certain different sort of bubbles that are basically more common. One of them is a financial bubble that typically happens in a certain financial asset, either due to leverage or inflated demand with leverage. And the other bubble that can typically happen is a demand bubble, which I think that most people that ask whether we're in an AI bubble basically ask, okay, are those investments sustainable? Will the ROI will materialize in the next few years? And if it will materialize, will that be the slope to justify that certain investment? So I think if you look at it in past bubble sort of retrospective, and you look what happened in 99 and in the dot-com bubble, so a lot of it was driven by telco companies which had no business model, and the last 2 years it was driven mainly by debt. If we look at the current state of sort of CapEx investment, the companies that are making the major part of those investments are the big tech companies or the hyperscalers, and it's being funded by free cash flow. So obviously, there are certain elements in this investment period that are more speculative, because nobody will know how the LLM landscape will evolve over time, and will OpenAI or Anthropic be able to sort of monetize on the solutions that they're currently providing, and specifically to support the commitments that they are taking. But if you look at it from a different point of view, the biggest majority is being driven by the big tech. And if you listen to the Meta or Google calls, they basically say, hey, we understand a lot of it is speculative. We have the resources to keep supporting it, but in case it doesn't materialize, we can quickly allocate it to other sources of needs. I mean, Meta discussed in their last call about a 2% sort of uptick in conversion. That's quite significant if you look at the CPM and how it's going to translate in the next few quarters. So they have a lot of internal uses to those investments. Obviously, they overinvest, which is okay, but it's currently being supported by a tremendous amount of free cash flow, and they do have the muscles to keep monetizing it, to keep supporting those sort of investments. So are we in a bubble? If I had to answer yes or no, probably no. Can we get there? Probably yes. So it's a not yet sort of answer. But there are a lot of things that can still unfold here before we reach those levels.
Makes sense. Thank you. Daniel, for you, S&P multiples are now at elevated levels when you look at the historical periods. Do you believe that this can sustain, or are we going to revert back? And then I guess within that, in that framework, really, where do you see opportunities?
Yeah, so that's the big question, right? It's a question which we seem to be getting a lot on my desk from people within my team and with the department. Like, can we sustain the multiples? The truth is, these tend to be the topic of most strategy reports today. Most of the sell side are trying to push maybe this narrative. Without having to say those 4 most dangerous words in the market, this time it's different. Maybe I'll do a 5-word one. Maybe this time it's different. So I think there's a bit of a lazy analysis going on, and a lot of people, strategists especially, they whip out their models, and they look at the S&P multiple. It's currently, 23 times on a forward multiple, and they plug it into their model, and historically, on average, it's approximately 17, 18, depending on what you look at. So that's 2 standard deviations, and that kind of flashes red on the models, and that's kind of the narrative they want to push. So it's lazy for a number of reasons, but specifically because I think now, again, without having to go down this time it's different narrative, now the index today is very different from the index, specifically the S&P 500, is very different from the index 10 years ago, 15 years ago, 20 years ago, which is what they're doing the historical comparison to. Today, as we all know, it's an index which is massively overweight tech and tech-like equities. I mean, depending on how you define tech and the wider tech sectors, it's up to 50% of the S&P today is in that field of that kind of sector and tech-like sectors. And that means that when you're looking at the index and as a sum of its parts, it's an index which is, again, overweight tech and tech-like, so it's a much higher quality index. If 10, 15 years ago, the dominant weights in the S&P were more kind of cyclical type sectors, like banks, energy, what have you, industrials, today it's definitely not the case. So that means a number of things. So it's from a leverage perspective, if you're looking at it as like a stock, S&P 500 is a stock, it's a low leverage company, essentially. It's tech dominated, which means it's cash rich, relatively speaking. Higher quality, I already said, less cyclical, higher visibility of earnings, if you think about the heavyweights in the index. So then the question, like a good Jew, will answer the question with a question: what multiple will you put on a company which has that kind of those characteristics? I would argue that it's higher than the historical average. Now, is 23 the number? Who knows? But if I were to have to guess, not that we guess, obviously we're professional investors and everything is done with, we don't bet, we don't guess. I would say that this is we're in an era of structurally higher multiples. Where it goes from here, it doesn't worry me. The index at 23 doesn't worry me for the reasons I've stated. Now the next part of the question was, where do you see opportunities? Having said all that I've said, so I mean, it's impossible to give an answer today without mentioning those 2 letters AI. So we'll start with that. So following on from what I was saying with regards to kind of the sell-side community, I also think when it comes to AI, that's not what I think. It's factually they've kind of missed a lot of the initial stage of the ramp-up of the whole AI model in terms of the power of the model and what it is. In terms of the hyperscalers, definitely for quarter on quarter they've missed NVIDIA's numbers because they don't appreciate really what this revolution, this AI revolution, really entails. And I still believe, from a very top-down perspective, they're mismodeling a lot of the benefits of the model, and also the power of the model just from the hyperscalers. But again, going on to the next level, so there we think that easy money has definitely been done. So that if we're trying to look at kind of opportunities in the second, third derivatives, so what's kind of second and third derivatives that you would look at? So where the real bottlenecks are, there's a mass spend, capex, AI capex spend coming from hyperscalers, and it's being thrown at data centers and other stuff. And there's a massive bottleneck in terms of construction of these data centers, how to supply energy to these data centers. And there's just, especially in the US, there's just, the infrastructure there is old. They don't have the energy capacity to supply the mass compute needs of these data centers. So we're looking there, the opportunities there as various subsectors which kind of are dealing with in the utilities sectors and the industrial sectors, which specifically playing these second derivative, third derivative plays, and even kind of next level, maybe third, fourth derivative is like the energy plays. Energy is a massively beat up sector, one of the cheaper sectors. No one really looks at it for good reason. But there's going to be a big drain on kind of these kind of commodities, just from the data center perspective, in copper, but also oil, natural gas, which is going to be a big supplier, has to be a big supplier of the energy requirements of the data centers. So we're looking there. More broadly speaking, I would say, again, there will be a broadening out of this rally. So we think outside tech, what we would call the AI implementers. So kind of the flip side of what everyone told you to invest a few years back. Everyone was pushing the AI, the asset light model of investing. Now we're looking at opportunities for asset heavy, old America companies who are bloated in terms of their expense base, and they are implementing AI to reduce, to increase profitability, increase efficiency, reduce workforce, and we're seeing it. Just to give you one example, I don't have much time I have, but one example, because everyone will want a ticker, because that's what people come for. CHRW, it's CH Robinson. It's a US freight logistics. I think it's the largest in the US, $20 or so billion company. They, for 2 years, have already been implementing AI tools within their workflow. They have seen a 50% increase in productivity per worker on the ground, and that came with a 30% reduction in headcount. So kind of do the maths, it's a big deal. So we're looking for those and that company's already moved, so I don't necessarily recommend to buy it, but like those types of companies which are ahead of the game, ahead of the curve in AI implementation, and can really use it to bring down their cost base and increase productivity and profitability.
Thank you for that. Yeah, certainly a lot of firms, a lot of companies out there that's applicable to. Gilad, turning to you, given the tech concentration in the index today, can you speak to how tech and AI, obviously continuing on this theme, has been infused into all companies and how it impacts you as an investor and how you look at companies?
Yes. When you look at the index concentration today, so if you look globally, we see it all over around the world. I'm going to talk especially about the US indexes, that they represent around 70% of global equities, although we can see it also in places like Taiwan with TSMC or South Korea with Samsung SK Hynix. But looking at the US indexes, so I guess concentration comes from two main reasons. The first one is passive investing. So in the last 10, 15 years, we see massive flows into those index funds, what makes the index fund buy more of the big names and make the price of it goes and the weight in the index. Secondly, in the end, those 10 big companies are truly an amazing companies. They have the innovation, they have a global reach, they have really the EPS growth, they grow like double digits in profit every year. So people are, investors are putting more and more money there. This way, 10 of the biggest companies in the US represent around 40% of the index. And we're coming again to the question if the multiply of 23 is expensive or not. So we think not necessarily. And obviously the main reason for this is tech and technology related stocks. So I don't mean only the IT sector as we know it, but Google and Meta in the communication services, and obviously all the consumer names, Amazon, Tesla, and Netflix in the consumer, and fintech names in the financial sectors, and surprisingly also in the last years also the utility sector. Utilities usually it's a more defensive sector, bond proxy, high-paying dividend kind of investment, but the huge demand for electricity in the last years because of AI and technology pushed this sector to one of the best performing sectors this year, almost 20%. And this thing comes from the surge in electricity demand, comes from mainly from EVs, comes from data centers demand for electricity in the US. In 4 years, I think 11% of all the electricity in the US is going to be towards the data centers. And the fourth thing is AI. AI servers consume 4 times more electricity than regular servers. So when we look at this space of electricity demand, we cannot avoid a big theme. It's nuclear energy. So nuclear energy is clean, reliable, and not depend on any kind of weather like solar or wind. When you look at the nuclear energy, the governments really support the growth of this thing. Today, it's around 20% of the US electricity capacity. And by 2050, many countries want to triple their capacity. So I'm not talking only about those huge nuclear plants. I'm talking about also now small SMRs. SMR is a small medium reactors. It's something that the US, through a lot of executives order, promoting. And that means that if Amazon builds a data center, they build inside a small nuclear plant that they're going to provide all the needs, all the electricity needs of this data center. And this is off the grid, can be off the grid. It's something really revolutionary. And we do think when we look at this space, we think there's a lot of opportunities still to look on uranium mining, to design those factories, operate and build them. And even though many companies still are not profitable, still we see the return this year was amazing. And we still think there's a lot of meat left on this bone going forward. And this is my finding unexpected alpha in unexpected places. Thanks.
Thank you. Sam, switching gears a little bit to you, given that the unique perspective that you provide in the EM and frontier market, the big question on a lot of people's minds in the beginning of the year was, is US exceptionalism dead, so to speak? And if so, where within EM, which geographies or which sectors do you think should outperform the general market?
The problem with US exceptionalism is an exceptionally stupid concept. To start off with that. And the reason why it's exceptionally stupid is that although obviously the US is a very unique country, there are remarkably 193 other unique countries that are members of the United Nations, and I'm very special to my mum, but there are probably 8 billion special people on the planet. So, and I think that there's a slight problem when we start thinking about exceptionalism. America obviously has had a unique economic trajectory, but I do challenge anyone to find the term exceptionalism with regard to the stock exchange pre about 2022. And it's only after a very long bull market that suddenly America became exceptional. The SOX, as in the semi-index, wasn't very exceptional between 1997 and 2012 when it went down 30% for 15 years, when there was an enormous amount of tech discovery. It was exceptionally bad. And I think exceptional is just one of these great momentum terms that gets created post facto. So when it comes to America, and therefore emerging markets, I think there's a real challenge with investing in America, and that is that today, and that is the fact that whether we've had a Democrat or Republican in charge, whether inflation's been 0 or 7, the vast majority of this room, in fact, the vast majority of investors around today have never experienced an emerging market bull market, because you have to be over 41 or 42 to have ever seen emerging markets outperform. And apologies to all the people in the room that are over 40, but they're not necessarily a majority, right? If you start working when you're 22 or perhaps slightly older here, you're right, you've had 18 years since 2007 when emerging markets have been awful. And at every single point through those 18 years, adding NASDAQ to your portfolio mix gives you greater return and less volatility. And therefore, I've back-tested my portfolio, and it's wonderful by adding NASDAQ, and it's even worse if you, or even better if you remove emerging markets. Now, let's just try to think if that's going to be sustainable. My view is that what we've actually seen over the last 20 years has been that American economic and political power keeps falling on a relative basis. Obviously, it's the most important country in the world, but the relative importance of its economic and political power keeps falling, yet its market cap power keeps rising. And there is a dissonance there that at some point comes unstuck. Because when one does travel to China or India or Indonesia, all these lovely places I've had to have gone to in the last few weeks, or Saudi or any other places that perhaps people here don't get to, but I have to go to frequently, companies like Google and companies like Amazon and Meta and everybody else are viewed as American companies, whether Trump likes it or not. Perhaps he does like it. And so the reality is that we have this dissonance, and it's difficult to think in a world where you have a US president that seems to want to get rid of some form of the independence of the central bank, wants interest rates lower, and says so very publicly, and seems to be arguing with various institutions whether this is actually a place that should have such a big discount in equity risk premium to the rest of emerging markets, right? Because the nature of emerging markets really is a collection of countries you want to go on holiday but not to live in. That's the nature of emerging markets. And the reason that's the case is because they don't have independent institutions, they don't have a central bank that can actually make its own policy, because there's some guy, generally a geriatric fossil, in charge, who decides that, you know, we want interest rates lower, and like tells the central bank, you need to lower interest rates because I don't like what's going on. And you know, that's what happens in lots of emerging markets. And I sort of wonder whether we see some of those behaviors elsewhere today. So my point about emerging markets is we're looking at emerging markets today which are able to compete on a technological basis. Just go to China, and they're completely out producing exports from the compared to the rest of the world. It's got lots of problems, China, but the ability to produce stuff that no one else can, it's just truly remarkable. I was at the Canton Fair just a week and a half ago, and just seeing what they're producing at scale compared to anything one can find in the Western world is truly remarkable. And then you look across the rest of emerging markets, you're looking at cheap stocks in places that are actually growing, unlike sort of, let's say, the open air museum that is much of Europe today, right? So that's important to realize. You're actually looking at a place of, I mean, sorry, Europe does have football. It's got that. In general, it's a big advantage. So, and in England we speak English. So, but apart from that, it's difficult to see what its competitive advantage is. So lots of emerging markets are growing faster. They're producing stuff that the rest of the world wants at a really cheap multiple. And even better, the vast majority of investors have never actually seen them do well. So US exceptionalism, absolutely. It's a truly exceptional country. And that's why there's the American dream, and they're really good at marketing that dream. It's not so exceptional if you happen to live in Alabama. And you know, and your life expectancy has fallen. One of the very few places in the world where life expectancy has fallen for men in the last 10 years. Not so exceptional. And so I'm not sure I agree with the concept of US exceptionalism, but I definitely agree that the vast majority of investors like momentum chasing, so it's definitely worked until now. Whether it continues to work, I'm not so sure. Final word on emerging markets, it's not that everything is great about those places, right? It's not there's some great blue sky story, you know, people who want to believe in wonderful sort of stories of demographics of every person in, you know, China ate an extra orange, what does that do to Florida, or sort of those sorts of control right ideas, that they're pretty stupid, but that doesn't necessarily mean we aren't at the cyclically right time to be investing in emerging markets, which is probably today for the next 2 or 3 years. Beyond that, I don't know.
Thank you very much to the panelists. Thank you, everyone.
The next session, From Signals to Autonomy, How AI Rewriting the Playbook of Quant Trading. We will explore one of the most profound shifts underway in global markets, the evolution of quantitative investing from signals-driving strategies to increasingly autonomous AI-powered systems. I would like to invite, and this is our honor, to invite Igor Tulchinsky, founder, chairman, and CEO of WorldQuant, one of the world's most influential quantitative investment firm with a global research network and pioneering approach to data-driving strategy development. and Lior Segev, one of the founders of the IHFA and a partner at KH2 Capital. Please.
Pleasure to be here, and welcome Igor, welcome Mr. Tulchinsky. It is a pleasure to have you here today in Israel. Thank you for coming.
Thank you very much.
Your journey of immigrating to the US from Belarus at the age of 11, to founding and leading one of the world's most innovative quantitative investment firm is truly inspiring. We're excited to discuss your career path, your vision for WorldQuant, your approach to leveraging artificial intelligence, and obviously your plans for Israel that we're excited about. And I'll start with your career and a little bit of kind of philosophy, if I can call it. You studied in video games programming at a young age, Bell Labs, and then Millennium Management, and lastly founded WorldQuant. What guiding principles have helped you navigate those various and very different roles?
Well, I always have been more tactical than strategic in the way I did things. The philosophy is that if you're doing the best that you can, what you're doing today, that tomorrow will emerge naturally in a good way. And the path that you mentioned from video games to Bell Labs to Timber Hill and then to Millennium always reflected that. I always reached the best that I could in what I was doing, and then it was time to move on. And sometimes I used unorthodox methods of moving on, like mailing out 1,000 letters to CEOs of different companies. But that's itself is statistical in nature. It used to be if you would send out 1,000 letters, you would get 10 interviews and 2 offers, pretty much.
So brute force.
Brute force.
Yeah.
Always works.
You're an immigrant.
Yes.
Israel is, like the US, is a country of immigrants. We pride ourselves on that, about the melting pot that we built here. How did that impact your career and thought process, but also your opportunities? And I think you alluded to it with the 1,000 letters, right? And being the most, as immigrants, we sometimes need to be more aggressive, more. But how did it impact that, all your career and your decision-making process?
I think being an immigrant at an early age and leaving everything you're used to and starting over in a new place, new language, everything is new, teaches you that the world doesn't really end if you change things. If you go somewhere new, it actually tends to get better. So
did it somehow change your investment philosophy and the way you look at the markets and algorithms and opportunities?
I think it did. It made me very inclined to take risks. I see nothing wrong with taking calculated risks. It's a part of life that started at an early age. And what was the second part of your question?
Did it change the way you trade? So I think that's the kind of, you've answered that. So
okay.
I'll talk a little bit. I would like to talk to you a little bit about WorldQuant, the structure and the decision making.
Yes.
You said the talent is distributed equally, opportunities not. How does WorldQuant structure help bridge that gap?
Yes, so we have always tried to get the best people wherever they live, and the best people don't. The most intelligent people don't live in any one particular place. Actually, it's a complicated picture, which depends on the country, the education system, many different things. So we have 17 offices in, 27 offices in 17 different countries, and in each one of those places we find the most intelligent people, and the net effect is you wind up with the most intelligent people from around the globe, and they're all slightly different, or different locations have their own little brands of intelligence, and the mixture of it is valuable.
So on that, how do you control the decision-making progress, and how do you run a global organization, 27 different locations, multinational, different cultures, but with one goal, right? Generating alpha. How does that work?
Well, first, pretty much everything in our company is formulaic and tied to the dollar that's made. So when the dollar is made, it's back propagated to whoever was responsible in making it, PMs, researchers, and so on, in the right proportions. So the motivational structure is at least partially that, and the management structure is mostly, but not entirely. It's part of hierarchical and part of a team of teams kind of structure, like General McChrystal, who advises us, writes about. We have lots of teams, and the teams communicate with each other. The hierarchical structures tend to be a little slow sometimes.
Understood. Now, you've been part of the quantitative asset management world and algorithmic trading for about 3 decades now. Obviously, we're blessed to be part of the, I think one of the most exciting periods of quant trading and AI. How do you see the world shape? How do you see our industry shapes as a result of AI and what's going on today? And it's probably, and I would say, if you may, speak about, because it's multifaceted, right? So it's not only the front office, but also the way we manage the businesses and the flow. You talked about 27 different offices. So how does that impact it, and how is it different than from when you started?
Okay, yeah, AI is the latest incarnation of AI with LLMs and all that is truly transformational, and we're implementing it throughout virtually all the layers in the company on the research and trading levels. We're putting in agentic based systems which make our research, we hope, about 100 times more efficient than it used to be. On the programming side, there's the programming has become much more efficient as well, and we're putting AI everywhere that we can. So it's a real game changer. That's in the hedge fund business. Aside from the hedge fund business, I also have a a little venture capital company and what's called a foundry, a studio in the U.S., and I'm opening another one here in Israel, all built around AI and the disruption of existing industries around AI.
How do you keep, obviously you guys are not the only one who do that, how do you keep your competitive edge? And where is the competitive edge, if any?
Well, in a hedge fund business, we've been at it for a long time, and legacy, I think, is and the length of time you've been doing it is part of what gives you the edge. You just have more data, more experience, more of everything than all your competitors. There's not so many who have been doing it for 30 years. Aside from that, I think it's important not to look at what everybody else does, but just to do what you do and focus on it and do it the best. Like all the experiences I had looking at other people have not turned out well, but just do what you do well today, and tomorrow will be good.
I want to talk a little bit about Israel and what you guys are doing here. Obviously, you've been active in the Israeli market on the research front for about a decade. I know alone for about that time, so I'm aware of what you guys been doing and how you were part of the quant ecosystem here. Would love to hear about what do you see for the future here, and what you find exciting, and why you think Israel is a place you may want to focus and expand further.
Yeah, so yeah, we had the office in Israel at least 10 years, I think more. And with time it has gravitated towards using AI. And so we've been using AI, deep learning, etc., for quite some time. So and it's been successful. So naturally and successfully, our office here has been providing a lot of AI for the entire firm, and you know, given the fact that AI itself is on a hyperbolic growth curve, I think being long AI is a very good idea. I think in Israel there's a lot of talent in the area of mathematics, programming, and AI, and I can't really think of a better place to do AI than Israel, really.
Anything we should do better to accelerate that and really become leaders in that? Because obviously you hear about underdeveloped countries where math and physics and sciences are more the top of the list, and then in Israel, and we just heard Professor Amir Yaron, the chairman of the Bank of Israel, talking about where we are there. Anything we should do better, and you think that can accelerate and make Israel potential higher? Mazel tov. Yeah.
Is there a wedding here?
I guess there is. Yeah. We did not make the list. We didn't make the cut.
Okay. So to succeed faster, I would say, to succeed faster, I think it's important to have focus. It's important to kind of have a countrywide understanding of where things are going, and for young people to channel themselves into the right places, and then it's important to do what Israel already does best. It's a startup nation, and so just plug into the startup machine, the AI.
And there, funny enough, there is the pedigree, and one of the panel, Scott Tobin, who's one of the leading VC investors, he was talking about the Israeli VC and tech ecosystem, and how easy it is, or easier, for young technologists to be part of this because of the pedigree, and his dad, and his father, and his brother, and his a friend from the military service, you know, are all in the tech industry. So there is already pedigree and ecosystem here, which we don't see yet, and at the hedge fund and quant strategies ecosystem. What would be your advice to a young quant or an aspired quant trader, algorithmic expert who wants to enter into this world? What would be a career path, or kind of the check the boxes you can give that person advice on?
I think that there are some hedge funds and quantitative shops that are coming here, and my advice would be to join them, learn everything possible, and leverage everything that Israel has in terms of talent and abilities and thinking out of the box. Yes, it's true that the army doesn't currently have a hedge fund unit, but maybe
probably
it should.
Not going to have. Call it, yeah.
But it's a natural fit. I think hedge funds coming to Israel, natural fit. Just gotta make it happen. Gotta build up enough critical mass.
Can you talk about World Quants and yours vision for Israel and what you plan to do here for the next 1 to 5 years?
Yes, in our quant business, we're planning growth and more AI. It's pretty straightforward, pretty linear at this point in time because we've been here 10 years, and we're also opening up a venture foundry type of company focused on AI as well. So this is going to be successful, hopefully within that time period.
Good luck in that. I want to talk about Israel and beyond the World Quant operations. I think, and it was evident by last night's dinner, you have a special affinity to Israel. What draws you personally to Israel? And maybe is there a cultural, historical, or intellectual affinity that resonates with you beyond what we do, like beyond hedge fund, beyond quant, beyond World Quant?
Well, of course, being Jewish, and I have a natural affinity to Israel, and when October 7th happened, it's it accelerated and woke up in me, and so I started coming over and helping in various aspects that I could, and really it's an amazing country where everybody helps each other, and if you just look at what has been achieved in the last 2 or 3 years, it's amazing. You know, after I leave Israel and I go back, I go through withdrawal for several weeks because you know your emotions are just not engaged at the same level. What's there to do? Eat a sandwich, you know.
The discrepancy. Thank you for this world, and thank you for your support, and good luck. And I truly hope that you will be successful. Other hedge funds would be successful here, and will be able to grow the industry to where we think it should be, and that's what we've been doing, what we're doing it. And thank you for coming here and spending time with us. We truly appreciate it.
And thank you for the opportunity to be here.
Igor, Lior, thank you very much. Igor, you're always welcome here in Israel, so thank you.
My name is Max Karpel. I'm a partner at Aiken. Aiken's an international law firm. The entire law firm is built around private investors, private funds, and it's the only firm that I'm aware of that has a global footprint. And okay, it's the only global law firm with a presence in every hedge fund center around the world, and hopefully one day Israel will be part of that as well. Already in the Middle East, have the largest office of its kind in Abu Dhabi, and UAE. Dubai, and we just opened an office in Riyadh. So very bullish on this industry, and it's been my mission, as some of you know, for over 13 years to help this industry in Israel become as strong as it possibly can be. I'm based in New York. I've been working with Israeli managers for the entire time period for the last 13 plus years on helping them establish themselves in terms of complying with the regulations in the U.S. they need to comply with to market and to manage money that is originating in the U.S. And since the very beginning, what has driven this industry is performance. The performance of Israeli managers is strong, and that is ultimately the reason why there's global interest in this industry. And the fact of the matter is, people wouldn't know that if it wasn't for our next speaker. Our next speaker is the founder of Gilboa. He publishes the best data that there is about this industry so that people from around the world can understand what's going on here and why this is such an important market for them to be in, for them to raise money in. So I want to invite, where are you? So if you should come up to the stage. One of the innovators, the first players in this market, Ariel Bino from Gilboa. Thank you.
Thank you, Natalie, for putting this amazing event together. Also, thank you to all the funds who participated in the survey. Without your help, we wouldn't have been able to put this together. My team at Gilboa for the hard work they've done into creating this survey. And I don't see our friends from the administrators, but there as well. There, lift your hands. So yeah, thank you, Shmuel, and for your help with this. Again, would not have happened without you. Okay, we'll start with kind of the headline number. How much money does the industry manage? So we're up to 23.6 billion. 7.8% growth over the previous year. Now, a couple of words about this. This includes private debt. When we first started publishing the survey, private debt was very small, and we included it with the hedge funds because they have monthly NAVs and quarterly redemption, so we included it with hedge funds, even though as the years went by, we understand it's not exactly like in the liquid asset hedge funds. So the headline number includes this, but already last year we started carving out the private debt, and this year we have the next slide you could see. I'll talk about it in a second. So the private debt we'll cover now in one slide, and probably in the next couple of years the numbers will be without the private debt because it's different characteristics from the hedge fund industry that most of you belong to. Again, the headline number is 7.8% increase the last year, compounding at 19.3%, incredible number. Looking at just the private debt, we just have one slide on this. The numbers actually contracted the last year by 22%, from around 9 billion to 7 billion, going from 40% of the industry down to 30. This is private debt. All the following slide will be on the liquid asset hedge funds. Okay. So just the liquid asset hedge funds, actually very impressive growth, 28% growth over last year, up to 16.7 billion, up from 13 billion, compounding since 2011 at 16.4%. Going into the numbers, this is comprised of around 230 funds managed by 160 managers. The average AUM per fund is $72 million. The 10 largest funds manage 7.8 billion, and we have 31 funds managing over 100 million. For the first time, we also publish a number of funds open and closed. So we had 33 funds open this last year and 14 closed. Employees in the industry. So we're up to 970 if you include the private debt fund. So it's around 1,400. So a very impressive number. And typically in hedge funds, I'm not sure, we didn't calculate the number, but typically they say how many jobs beyond the actual hedge funds does the hedge fund industry support. So I know in New York and London, it's about 2 to 3 times more in kind of support teams. So we're talking a couple thousand employees in the industry. Looking at a breakdown by strategy, so the same strategy that was the largest last year is again largest this year and accounts for 50% of the industry in terms of AUM. It's actually Israeli equities. Israeli equity, long-short strategies, followed by multi-strategy and fixed income. Overall, money invested in Israel accounts for about 3/4. And then we have global strategies and macro and quant, which is about 10 to 15% in terms of AUM. If we look at in terms of number of funds, so it's a similar picture to what we saw last year. There are many funds doing global, but they just in Israel at the moment they tend to be smaller. Hopefully with some of the initiatives, I know Lior, like ones that you're leading, we'll see this pie grow of more money coming to run hedge funds in Israel, but investing globally. Let's talk a little bit about performance. So performance data we actually have going back to 2007. We published the TGI index, which was originally the T is from Tzur, now it's just TGI. So we publish data, and the main index that we publish is the TGI Israeli Hedge Fund Index, which is equal weight index of all Israeli hedge funds that meets certain criteria. And we see that since 2007, this index delivered close to 500% return, which is double the return of the Tel Aviv 125, about 5 times return of the Israeli All Bond Index. So, you know, you could say, okay, you delivered double the returns in the market, you must have taken on a lot of risk. But actually we see that the risk of the average Israeli hedge fund is somewhere in the middle between bonds and equities. It's about half the level of the volatility of the Israeli equity markets. And 10-year annualized Sharpe ratio of 1.4 compares to 0.7 for both equities and fixed income markets. So investors in Israeli hedge funds have benefited tremendously over the past decade and more from investing in hedge funds. Breaking it down by strategy, kind of zooming in on the last 5 years. So we see something incredible, especially the last 2 years have been, both years, both 2024 and 2025 have been among the best years on record for Israeli hedge funds. So last year we felt bad saying, you know, while we had hostages in Gaza, we felt bad saying, oh, you know, 24 was one of the best years. So we kind of kept that, kind of being more modest about it. But yeah, incredible performance the last 2 years, mainly driven by funds focusing on the local markets, especially Israeli equity, though we see also funds doing global investing. On average, very strong performance actually over the last 3 years. One strategy that seems to be lagging on average, obviously there are outliers to both ends, is quantitative strategies that I know you guys talked a little bit about it. But for Israeli quant managers, on average, it's been a bit of a tough ride the last couple of years. Where is the money invested? So I think you could have seen it also from the strategies, but about 3/4 of money in Israeli hedge funds is invested locally in Israel, and about 1/4 is invested globally. And finally, where does the money come from? So I don't know if to say, unfortunately, only about 12% is from foreign investors, as in non-Israeli, and 88% is from Israeli investors. This number is down, actually. Foreign investors is down the last year. We had some sovereign wealth funds pull money out. But I think we're starting to see a shift back of foreign investors, different foreign investors, and sometimes the same ones, starting to come back to Israel, and I'm very hopeful that we see this number climbing significantly in the coming years. In terms of who is investing, what type of investors, so about 20%, this number has been pretty stable the last couple of years, about 20% institutional money. Most of the money is Israeli high net worth and family offices. The last slide I have is kind of on a tangent in this industry. It's the new initiative of the Israeli Securities Authority, the mutual hedge funds, which is a new product. It's still relatively small, managing around $1 billion, 46 funds, managed by 20 different fund managers. This concludes the survey for 2025, and looking forward to seeing you all again next year.
נטלי הזמינה אותנו לנהל פה פאנל, זה היה לפני כמה חודשים, ואמרתי, מעניין, מה יקרה בשוק עד אז? האם יהיה תיקון? ומה יהיה הצבע של הדיון שלנו? אז אין שינוי, המסלול מתקדם, בינתיים לא משנים מסלול, ואני ממש ממש מתכבדת לנהל פה פאנל. התיישבתם ככה לא לפי סדר השעות, עכשיו אני מותקלת, אז ניר צרפתי מאוליבו, גבי דישי, פרומה אלפא בעברית, ורון סנטור ספירה, ואלון דניאל מרעם, IBI. אז כבוד גדול, ואני רוצה להתחיל, באמת הגענו כזה באמת לרמות מאוד מאוד גבוהות בשוק, ויש המון שאלות, אבל בוא רגע נלך לבסיס. והבסיס הוא, אני רוצה, לאור השווים הגבוהים, ולאור הפסגות שהגענו, אבל אני רוצה מהבסיס, כיצד מנהלי קרנות גידור מגדרים בפועל את התיק ההשקעות שלהם. ממש שאלה בסיסית כזאת, לפני שניכנס לתוך התוכן של התיקים. אז אנחנו נתחיל עם גבי.
קודם כל תודה. בעברית בשבילך.
בעברית,
בעברית בשבילך. אז קודם כל, אני לא חושב שיש שאלות קלות אף פעם, בטח לא בשווקים כאלה. באופן כללי, אני חושב שגידור, זה סימן שאלה, נכון? השווקים רק עולים, למה בכלל צריך גידור? יש כמה סוגים של גידור, בעיקר בסיטואציות כאלה. גידור אחד הוא גידור שבקרנות לפחות, הוא סוג של ongoing. אתה יכול להחליט שאתה מחזיק פחות אקוויטי ויותר מזומן, אתה יכול להחליט שאתה משקיע באופציות, בין אם זה קצרות, בין אם זה ארוכות, אתה יכול להחליט הרבה דברים. אנחנו יושבים פה בבורסה בתל אביב, והבעיה היא שאין כמעט כלים שאפשר להשתמש בהם לגידור אמיתי בישראל, זה אחד הדברים המורכבים, אני חושב שזה גם אחד היתרונות של קרנות גידור שיכולות לנסות ולייצר לעצמם כלים. אנחנו לפחות בתקופה כזאת מסתכלים על גידור כגידור בעיקר מתחלק לשניים, אחד מקרו, שאתה מחפש לראות בסוף בעולם הסיטואציה הספציפית של ישראל, אם אתה מגדר אותה ואיך אתה מגדר אותה, לרוב זה מאירועים קטסטרופליים, אירועים קיצוניים, סוג של אופציות מחוץ לכסף לטווח ארוך, שוב מורכבות מאוד מאוד בשוק הישראלי. אבל הגידור האפקטיבי יותר, שאני חושב שגם אפשר לעקוב אחרי קרנות גידור ולראות אולי איזושהי מגמה בתפיסה שלהם, זה איזושהי הגדלה של דווקא החשיפה ברוטו. יש בזה גם סיכונים, אבל יש בזה גם היבט של גידור. ידוע שכששוק עולה בעקביות כל כך חזק ובאופן כל כך מהיר, לרוב יש חברות טובות שמגיע להן העלייה המשמעותית הזאת, ומצד שני יש חברות שפשוט נדבקות להן למעלה ועולות ללא הצדקה. הרעיון הוא פשוט להישאר ולהצליח לבחור את החברות הטובות, לעשות שורט על החברות שמתומחרות פשוט כי יש אווירה טובה. זה מבחינתנו לפחות הגידור האולטימטיבי בתקופה כזאת. שוב, זה יחד עם הגדלת הברוטו.
זה הדוגמה הזאת שלכל מי שמכניס למוצר החדש AI, פתאום הוא ככה רץ קדימה ללא שום קשר לכלום. אשמח גם אתה, דניאל, תספר לנו, אלון. כן, עובד.
אז באמת, אז קודם כל נעים מאוד, ותודה. אני חושב שבאמת גבי נגע...
בינתיים אנחנו רק בטכניקה, איך מגדרים.
כן, אז אני, בגלל באמת שגבי נגע בכל המרכיבים המהותיים שאפשר דרכם לגדר, אז אני רק אצלול למשהו שיותר מאפיין אותנו, מתוך המרכיבים. אני חושב שבישראל לעשות פוזיציית שורט על מניה שנדבקת, זה משהו שהוא מסוכן, כי בסוף השוק פה עדיין מוכתב על ידי הגופים המוסדיים הגדולים, שאם במקרה אני עושה שורט על מניה שנמצאת לאיזשהו גוף גדול באקסל, אקסל תיק מניות ישראל, ועכשיו התכנסה ועדה ויוצאים מהוועדה ומחליטים להעלות את רכיב ישראל באחוז, אז יכול להיות פתאום ביט של 50 מיליון שקל למניה שאני עליה בשורט, והגוף המוסדי בסדר, קודם כל זה לא כסף שלו, והוא יכול להגיד, בסדר, אני קונה בשוליים, כל הנימוקים האלה וההסברים העצמיים, וזה דבר מסוכן. מה שאנחנו היינו רוצים לעשות בהיבט הזה, זה יותר לנצל את סטיית התקן בשוק, כשהסטייה נמוכה בשווקים. זאת אומרת שאופציות הפוט הן יותר זולות, אפשר לקנות את האופציות האלה יותר בזול, והכי פשוט, מכיוון שאנחנו כבר יושבים על תיק הלונג, הרי כל קרן גידור, כולל כל מי שנמצא פה בפאנל וכל מי שלא נמצא פה בפאנל, בסוף הוא בלונג של בין 60 ל-90% כמעט בכל זמן נתון, 10 שנים אחורה. זאת אומרת שאם אתה גם כותב אופציית קול, 3-4% למעלה שפוקעת חודש קדימה, ומממן איתה את אופציות הפוט, אז קודם כל עשית איזשהו גידור שהוא יותר זול, ואם השוק עלה 5% באותו חודש, כי יש קומביה עולמית, אז אתה מפסיד איזה 0.2, 0.3 על הגידור, כי נשרפת במרכאות בכל, קצת שני עשית ארגזים על התיק. אז אלה הדרכים שאנחנו בעיקר משתמשים בהם.
הגידור הוא לא רק ביטוח מפני ירידות בשוק, אלא חלק אינטגרלי מאסטרטגיית ההשקעה שמטרתה לבודד את האלפא, אתכם, את היכולת שלכם באמת לעשות את התשואה מעבר לשוק. האם יש אסטרטגיה ספציפית מועדפת עליכם, או שעל פיה אתם לרוב פועלים? רון, בבקשה.
אז כמו שנאמר, בגלל שרובנו בשוק הישראלי לונגיסטים, אז רוב החשיפה היא באמת מוטת לונג לאורך זמן, אז גם השורטים שאנחנו עושים הם לא במשקלים סימטריים או זהים ללונג, ואצלנו אני חושב שקצת דומה למה שגבי אמר, רוב ההגנות הן באמצעות אופציות, נגזרים, שזה בעצם ניהול פורטפוליו מול מצבי קיצון, עם איזשהו אופטימום במבנה העלויות, זאת אומרת צריך למזער את העלויות ולנסות לייצר רמת הגנה מספקת במינימום עלות. עכשיו בנוגע לשורטים שהם מה שנקרא אלפא שורט, אז תמיד מחפשים באמת מניות, אם זה צמדים או מניות שהן תומחרות ביתר או דברים שהם לא מתאימים לתפיסה האנליטית, הפונדמנטלית. אבל זה לא מרבית התיק, זאת אומרת, צריך להיות מצב די קיצון. בישראל נניח רוב השוק הוא שוק של value, זאת אומרת, הוא שוק שנסחר ביחסית מכפילים יותר נמוכים, הוא יותר מוטי תזרימים, והוא פחות אופורי, או יש פחות סיפורי חלומות כמו בנסדק. אז ההזדמנויות של שורט ומניות בודדות הן גם כן יותר מוגבלות, אני חושב, בטח בסייז.
גם המחזורים הם סוג של מכשול?
בטח אם משווים את זה, הכל יחסי, אז אם משווים את זה לשווקים סופר מפותחים ועמוקים כמו נסדק, אז כן, אז יש פה חיסרון בסיסי, בשביל גם גודל הקרנות פה ראיתם את זה גם בכל הסקרים ובכל הסטטיסטיקה של הקרנות פה, אנחנו בעולם הרבה יותר קטן, מוגבל, וזה מבני, אז אין פה קרנות של 15-20 מיליארד דולר. אז יש פה יותר מוצרים, ביותר אסטרטגיות, ויחסית עם גודל יותר קטן.
ניר, מה האסטרטגיה החביבה עליך?
אז אנחנו גם קרן אוליבו, זה קרן שהיא לונג, אנחנו ממוקדים בהשקעות לונג בשוק הישראלי, והאסטרטגיה שלנו בסוף היא מאוד פשוטה, אז השקעות מבוססות על מחקר עומק, הכוונה שלנו היא בסוף לנהל תיק שהוא ממוקד יחסית במספר פוזיציות בודדות וגדולות, וכדי להגיע לרמת ביטחון גבוהה בהשקעה, להגיע לקונביקשן כזה, אתה צריך להשקיע הרבה במחקר, להבין את החברה לעומק מכל ההיבטים, גם במודל העסקי הפיננסי, וגם לעשות עבודת שטח ולהביא אינסייטים שהם לא טריוויאליים, וזה בסוף מאפשר לנו, והדבר הנוסף שמביא את האלפא זה טווח השקעה שהוא קצת יותר ארוך, פחות מסתכלים על הטווח הקצר, יותר 2-3 קדימה, וכשיש לנו את המשקיעים שמבינים את זה והולכים איתנו ומבינים את האסטרטגיה הזאת, אז זה משהו שיכול מבחינתנו לייצר את האלפא, ורק אני אגיד לגבי גידור, אנחנו פחות בעולם של לעשות נגזרים ושורטים, אלא מתמקדים שוב בלונג, והגידור מבחינתנו נובע מכמה מקומות. דבר ראשון, לנתח מאוד טוב את הסיכונים בכל השקעה, ולהבין איפה הדאונסייד, זה דבר ראשון מאוד בסיסי, ומעבר לזה גם לעשות איזשהו פיזור בתוך התיק, למרות שהתיק הוא ממוקד, פיזור מבחינה סקטוריאלית ומבחינת חשיפות גיאוגרפיות ודברים מהסוג הזה, כדי שייתן תיק הרבה יותר מאוזן, וגם כמובן החזקת מזומן, כאשר אין השקעות מספיק אטרקטיביות.
זה מעניין למצוא את המשקיעים האלה שמשקיעים בקרן שלך, ויש להם יש להם זמן וסובלנות לשנתיים. אתה יודע שמגיע רגע האמת, אתה דופקים בדלת, כמו בסרט.
יכיר לך אותם אחר.
כן. רון, תעשיית קרנות הגידור היא עצומה בעולם, אך בעיקרה הנתח הגדול הוא בארצות הברית. תוכל להשוות בין סגנון ההשקעה של קרן גידור ישראלית לבין קרן גידור אמריקאית?
אני חושב שהדבר הכי בולט, אני חושב שגם מקס הזכיר את זה קודם, שבאמת העולם, לפחות באמריקה, הפך להיות מאוד מאוד מוטה מולטי-סטרטג'יז. בעצם זה קרנות ענק שהן מקרו והן פרוסות בין המון asset classes. פה אנחנו הרבה יותר מוטים לכיוון של מניות, של השוק המקומי. הגדלים הם אחרים, אז אני חושב שזה גם פרמטר שהוא סופר חשוב פה. אנחנו הרבה יותר לונגיסטים, אני לא רואה הרבה קרנות פה שהם מרקט ניוטרל. המשקיעים פה יחסית הם פחות מסתכלים על יחידת תשואה לרמת סיכון, הם יותר מסתכלים על תקט הבנצ'מרק בכל זמן נתון, וזה מחייב אותנו להיות גם יותר אגרסיביים. אז זאת אומרת, בעצם לנהל חשיפות יותר גבוהות, עם כל מיני פתרונות שורטים והגנות שהן עדיין, הן לא מייצרות מרקט ניוטרל סטרקצ'ר.
גבי, מה אתה אומר על הנושא?
אז קודם כל, באמת, רון נגע, אני חושב, בזה שבישראל רוב הקרנות גידור הן long biased. אז אני חושב שאם אנחנו עושים השוואה לשוק האמריקאי, אז קודם כל, השונות היא אדירה, החל במבנה של הקרנות שמה, אני חושב שברמת נכסי הבסיס, כי פה נזילות זה אישו, ודניאל נגע קצת בנושא הזה גם, ואני רוצה לציין אפילו עוד משהו, זה סוג המשקיעים. בסופו של יום, נכון שאנחנו רואים פה שזה הכנס ה-12, אבל התעשייה הזאת היא צעירה בישראל, זאת אומרת שהרבה מהקרנות פה, אנחנו כבר 20 שנה, שגם רון, מתחילים כקרנות יותר קטנות, ולאט לאט הדבר הזה גדל, זה אופי עבודה אחר לגמרי. אני חושב שמה שאנחנו רואים פה זה את ההתבגרות של הדבר הזה, וזה אומר שאם בארצות הברית אתה רואה קרנות שהן הרבה יותר concentrated, או קרנות שיכולות לעשות אקטיביזם גדול, ולעבור להיות בעלי שליטה בחברות, ולקנות חוב פרטי, ולהפוך ולמחוק את החברות, זה דברים שאנחנו לא רואים בישראל יותר מדי. אני חושב שאנחנו נראה אותם, גם כי התעשייה גדלה, גם כי ההזדמנויות הופכות להיות כאלה, וגם כי יש פה איזושהי התבגרות.
לא הכנתי אותך על השאלה הזאת, אבל זה נורא סקרן אותי בסטטיסטיקה, הנתח של משקיעים זרים בקרנות. זה בגלל שאתם לא רוצים, או לא משקיעים בזה שיווק, או הם לא רוצים אותנו?
כולם דופקים בדלת ואנחנו לא רוצים. לא, לא, סתם. יותר קשה.
לרגע האמנתי לך.
כן, ואתה אמרת 20 שנה, אין לך שערות לבנות, אני לא מאמין, לא.
כן, החיוך מצדיק את ה...
זה הרבה יותר קשה, אני חושב, להביא פה משקיעים זרים לאורך זמן. גם רואים את הנתח שלהם, אני חושב שבשוק הישראלי הנתח של זרים באופן מבני הוא יותר קטן, יש איזה כל מיני סיבות, אני חושב שזה נושא לשיחה אחרת. גם אנחנו משקל אפסי באינדקסים העולמיים, גם יש פה סקטורים שאני חושב שהם קצת יותר מקומיים, אז הם דורשים יותר לימוד ויותר השקעה של תשומות, והמלחמה לא עזרה. זאת אומרת, היה פה איזושהי עננה כזאת, ואנשים לא רצו להתקרב לזה.
כן.
אני אוסיף עוד משהו אחד, זה כן עניין של נפח. בסוף זרים זה כסף קצת יותר גדול, וכשהתעשייה הזו הייתה קטנה יותר, היה מאוד מאוד קשה, אני כן חושב שיש לזה מקום, ורואים גם שינוי מסוים, מלחמה קצת עקבה את זה, אבל ככל שנפח המסחר יגדל, והתעשייה של הקרנות גידור תגדל, אני חושב שגם נראה את זה.
פעם פניתי לאיזה קרן, אמרנו, היה לנו איזה רעיון אולי לשווק את זה באופנהיימר, לנסות ליהודים בגולה, ואז אחד המנהלים אמר לי, תעשי לי טובה, אין לי כוח לכל הרודשוז האלה באנגלית, עם הטיסות וזה, הביזנס שלי פה מצוין, לא צריך עוד. הייתי בהלם, אבל זו הייתה תשובה טובה, האמת. אתה בוחר. ניר, מה לדעתך תרומתן של קרנות הגידור לתעשיית ניהול הנכסים בכלל?
אני חושב ששוב, יש פה ותיקים ממני שיתנו פה הרבה זוויות, ברור שיש פה תרומה לנזילות ולסחירות. אני אתן את הזווית, שוב, שיותר קרובה לליבי, נושא של האנליזה והמחקר. אני חושב שקרנות גידור, אולי גם קרנות שהן בתחילת הדרך או יותר קטנות, היכולת שלהן להשקיע הרבה מאמץ במחקר של חברות וגם ללכת לחברות יותר קטנות שהן פחות בפוקוס וברדאר של המשקיעים הגדולים. אני חושב שזה מייצר איזשהם הצפת רעיונות למשקיעים היותר גדולים. אנחנו רואים את הקשר גם בין הקרנות גידור למשקיעים המוסדיים, אם זה ברצון שלהם לקבל מחקר מקרנות הגידור, ובסוף גם קרנות גידור הרבה פעמים מביאות ויוזמות עסקאות בחברות, מציפות שוב רעיונות בחברות יותר קטנות שהמוסדיים לא ילכו ויעשו שם עבודה לבד, וגם אפילו לפעמים סוג של אקטיביזם, ברגע שאתה קרן גידור ושאתה יודע להביא איתך אחר כך משקיעים גדולים שיביאו את הכסף הגדול, אז אתה עדיין כקרן קטנה יכול לעשות מהלכים משמעותיים. ואני חושב שזה תורם בכלל...
המוסדי בעצם פולוור, הרבה פעמים קורה שלא. יש מקרים שהוא רואה
יש מקרים, ברגע שיש אנשים איכותיים בקרנות גידור, שהוא רואה שהם יודעים לייצר ערך ויודעים לנתח חברות ולהביא עסקאות מעניינות, אז ברור שהוא רוצה ללכת איתם, כי זה ייצר גם לא ערך. אז יש פה ווין ווין לכולם.
רון, מה אתה אומר על זה? על התרומה של הקרנות לתעשייה. אני
חושב שיחסית יש לנו כתעשייה אולי פוקוס קצת יותר גדול על אנליזה ותשומות שמאפשרות לייצר איזשהו ערך מוסף, וגופים מוסדיים פשוט יש חיבור שעושה להם גם שכל, זה ווין ווין באמת.
אז איך הם נחשפים בעצם, אתם מייצרים, איך הדינמיקה עובדת?
יש איזשהו פלואו גם של רעיונות, גם של שיתוף מידע, מייצרים באמת איזשהם עסקאות משותפות, יכולים להסתכל על זה כמו הרחבה של מחלקת המחקר שלהם, לצורך העניין. אבל אני חושב שהם גם, המחלקות האנליזה וניהול השקעות, גופים מוסדיים עשו התקדמות מאוד גדולה בשנים האחרונות, אז זה לא שיש פערים עצומים, זה גם עניין פרסונלי, אבל אין מונופול על רעיונות טובים ועל עבודה קשה ועל מקצועיות, אז אני חושב שזה צריך כל הזמן לרוץ יותר מהר.
ניר, אתה בכלל עשית את המעבר הזה לא מזמן, מהגופים המוסדיים לקרן גידור. מה הניע אותך על המעבר הזה?
אני הייתי הרבה שנים באמת בבתי השקעות, הייתי במור הרבה מאוד שנים, היה לי הזכות להיות שותף שם לצמיחה המאוד משמעותית, אבל כשראיתי את עצמי רוצה להתקדם הלאה, אז כן, מבחינתי קרן גידור זה המקום שהכי במידה הרבה ביותר יכול לבטא את היכולות של ניהול השקעות, לחזור לנהל קרן אחת ממוקדת בדברים שאני חושב שיש לי בהם ערך מוסף, שזה מניות בישראל, זה מה שהניע אותי, התשוקה להשקעות ולעשות תשואות טובות וללכת עם משקיעים תקופות ארוכות.
להימדד, זה הקטע. גם. כן. דניאל, כסקרנות, ואני גם קצת מכירה, מה התמהיל שאתם בונים בקרן בין מניות ישראליות פיור, לבין נגיעות למניות ישראליות בחול?
אז קודם כל זה ריסק. נכון, בסוף המשקיעים פה מסתכלים על קרן ישראלית לעומת התשואה של המדד, ויש קרנות שמתקשרות את זה למשקיעים, שמשקיעים יודעים שהקרן נמצאת אחוזים רבים במניות שמובילות את הכלכלה העולמית. לצורך העניין, מייקרוסופט, TSMC, מטא וכו'. וזה יותר מתכתב עם קרנות גדולות בשוק הישראלי. אנחנו עדיין מרגישים שכשאנחנו קונים מניה בחול, זה קצת כמו בוא נגנוב תשואה מחול. כי בסוף הבנצ'מרק שלי הוא תל אביב 125.
מטבל.
בדיוק. אז הלכתי עד הסוף במה שבאמת נאמר בחדר. ולכן הסייזים הם תמיד יהיו קטנים. ניירות, גם בסוף כשאתה קונה מניה בחול, בהגדרה היא מניה תנודתית. אתה אף פעם לא תקנה איזה משהו משעמם בחול. נדיר, האמת שבדיוק עלתה לי מניה סולידית בחול, אבל בגדול, אתה קונה ניירות תנודתיים בחול, ניירות שאחרי זה, אם הם יורדים 20% בחודש, והם יודעים לרדת 20% בחודש, או אחרי דוח כספי, אם השקעת בהם משקל יחסית גדול, אתה צריך לספק הסברים. ולכן בגדול אתה רוצה שזה יהיה או בצורה מאוד מאוד אופורטוניסטית, שאפשר להגדיר אופורטוניזם בהמון דרכים, במרקט דרודאון, בוויקס גבוה, מה שנקרא שלא רק אתה חושב שזה אופורטוניזם, אלא זה אופורטוניזם פר אקסלנס. שאתה פותח אחרי אירוע רגרסיה, ואתה אומר, מהאירוע הזה, המניות האלה עולות שבוע, חודש, 3 חודשים, חצי שנה, כמו באפריל. היה לך 100% ודאות, שחצי שנה אחרי, השוק למעלה. גם 3 חודשים אחרי. אגב, אפילו חודש נראה לי 95%. אז שיש לך אופורטוניזם מוחלט בחול, יש הצדקה לקנות מניות בחול, בקרן שהבנצ'מרק שלה הוא תל אביב 125.
ואז יש גם את החשיפה למטח, שהיא גם סוג של סיכון.
מטח מגדרים. אלא אם כן, כמו במלחמה, מטח הפך להיות גידור.
כן.
אז לפעמים דווקא את החשיפות האלה במטח אתה יכול לשחרר, כי זה גם גידור שאתה משלם עליו חודש, כל חודש אתה משלם עליו, אז בגדול מגדרים את המטח.
טוב, נעשה עכשיו סבב, שאולי הכי מעניין בשיחה שלנו לדעתי. זה הבורסה בתל אביב, זינקה, כשכתבתי את השאלות זה היה 39%, היום זה כבר ראיתי 45%, חשבתי שזה טעות, אבל זה אמיתי, זה מדהים. וכמובן שגם ה-S&P עולה יפה והנסדק. איזה תחומים או סקטורים בבורסה בתל אביב נראים לכם עדיין אטרקטיביים להשקעה למשך של נגיד לפחות שנה מהיום? רון.
איזה התקלה.
מה? היה כתוב.
כן, אבל...
חניונו מראש.
רגע, לא מניות, סקטורים.
סקטורים, כן, סקטורים זה יותר נוח ויותר...
אז יש כמה דברים. א', אני חושב שחלק ממה שעלה מאוד חזק, אף אחד אין לו ציפייה אצלנו שזה ימשיך לעלות בקצבים האלה, אבל מחיר הוא בגדול תוצאה של ציפיות, והיו ציפיות מאוד נמוכות, בטח לתוך המלחמה. אז כל הסקטורים שיושבים פה על דמוגרפיה חזקה ועל המשך גידול טבעי וחיסכון ארוך טווח, אלה ענפים שימשיכו לעשות טוב לאורך זמן, אני לא יודע לתזמן את זה, אבל המכפילים הם עדיין סבירים, קצבי צמיחה גבוהים, זה חברות איכותיות, טובות, אז זה ימשיך לעשות טוב, אם זה בנקים או גם ביטוחים, גם אחרי פחד גבהים כזה. אז זה תחום אחד. תחום אחר זה כל הנושא של באמת שדרוג, שיקום, שדרוג. יש פה כמה סקטורים שנפגעו מאוד חזק בגלל המלחמה, וכל הכניסה לעולם של בנייה ותשתית, יש פה ספר מכרזים ענק שנכנס פה לתנור לתקופה ארוכה. אולי בציפייה או באיזושהי תקווה שגם התמחורים השתנו, בגלל שמדד התשומות עלה, אז יהיו פה איזשהם עדכונים גם כן של התעריפים, ואז בעצם החברות האלה יכולו לחזור לייצר רווחים יפים, עם מרווחים הרבה יותר טובים, ויש שם מנוף ענק.
גבי, הוא לא השאיר לך הרבה, אבל תנסה להיות מקורי.
אז האמת שזה בדיוק, כששאלת שאלה, אותי, מה שהכי הלחיץ, אמרתי, רגע, האם אני אדבר ראשון, שני, שלישי או רביעי, כי עכשיו אני צריך להמציא משהו אחר. אז קודם כל מה שהוא אמר, ואני מאוד מאמין שבסופו של יום, באמת, רון נגע בזה, התחלנו מנקודה נמוכה, ועכשיו תהיה שאלה של השינוי. ואין ספק שחלק גדול מתומחר וקרה פה בתוך הדבר הזה, אבל אנחנו נמצאים עדיין עם קטליזטורים משמעותיים מאוד, בעיקר בעולם של תשתיות, גם על זה רון ככה נגע, אבל ראיתי רק השבוע מכרזים של 64 מיליארד למטרו וכל מיני מספרים כאלה, שאלה מה מהכתבות האלה יושם בשטח ומה לא, ואנחנו יודעים שלבנות מנהרות זה אפשרי. עכשיו בואו נראה שבאמת מישהו יוכל להרוויח מזה גם כסף. אז קודם כל התחום הזה, אנחנו מאמינים שיש לו סיכוי ופוטנציאל מאוד מאוד גדול, גם הגידול באוכלוסין הוא משמעותי. הדבר השני, וזה אני חושב שכולם פה, לפחות חלק גדול מהאנשים פה גם יודעים, אנחנו מאוד מאמינים לטווח ארוך בהתפתחויות הטכנולוגיות, אבל לאו דווקא דרך השקעה ישירה בטכנולוגיה, אלא בעולם ה-IT, השירותים לתעשייה הזאת. התחום הזה חווה היום באמת שינוי גדול מאוד בעולם בעקבות ה-AI, ואף אחד מאיתנו, שאלת על שנה, אז אף אחד מאיתנו לא יודע להגיד איפה העולם הזה יהיה, אבל החברות שנותנות שירותים ויצמחו לתוך המקום הזה, אני חושב שבעולם ובישראל, דרך אגב, באופן ספציפי עוד יותר.
דניאל?
אז התשובה שלי היא קצת יותר מסחרית, ואני חושב שמי שעושה אנליזה למניות ישראליות המון זמן, כבר קשה לו למתוח את המודלים, כי באמת פעם ראשונה שהביטוחים בתמחור כזה, והבנקים בתמחור כזה, כל הנדל"ן המניב כבר 50% מעל ההון.
בוול סטריט זה קלה קלות, אני יכולה לדחק, כן הבעיה.
אז פה כבר הכל נמתח לשווים.
27, 28.
אז הכל נמתח לשווים שקשה למשקיעים לקנות, אלא אם כן הם מבינים טוב את הסיפור. יש פה שני קווים שהם מצטלבים, שני וקטורים, תמיד אוהבים להגיד וקטורים שהם מצטלבים. אז וקטור אחד זה העניין, באמת כל מה שקוראים באנגלית AI, וכל תומכי ה-AI, ואני לא מספיק ידען כדי לדעת עכשיו באיזה רכיב בשרשרת כדאי להשקיע. רוב הרכיבים בשרשרת נסחרים במכפילים דמיוניים, מכפילים שאני לא יודע לקנות בהם מניות, אבל יש תחום אחד שהוא די בנקר, והוא לא נמצא במכפילים כאלה, וזה תחום האנרגיה ל-AI. כשאני מסתכל בבורסה הישראלית, אז יש לא מעט ניירות שיכולים להרוויח מזה. רק במעוף יש לנו את Enlight ואורמת ו-OPC, וב-90 כבר רואים חברות אנרגיה נקייה אחרות, כמו אקונרג'י, ואם זה מבטח שמיר ולוזון, שיש להם תחנות אנרגיה, וקיצור לא חסר. אז הפלי הזה על האנרגיה על ה-AI, שעוד לא התחיל בכלל בישראל, כאילו עוד לא התחילו באמת לדבר עליו לדעתי בישראל, על מה יתמוך ב-AI בישראל, אז זה משהו שאני הייתי רוצה להיות בו, היתרון השני של להיות בניירות האלה, שאף אחד לא יודע כמה Enlight שווה. אף אחד לא יודע כמה אורמת שווה. אין דרך בכלל, פותח מצגת של Enlight, אתה רואה מחובר X, בהקמה 2X, בתכנון 40X. יעני, סע. אז זה סקטור שבעיניי, שנה קדימה, כשהכל על האקסל מתוח וקשה לקנות, אז זה סקטור ומניות בסקטור האלה שיכולות לעלות בקלות עוד 30-40% שנה קדימה, וגם אז כולם יגידו, וואלה, זה הגיוני שהם עלו 30-40% שנה קדימה.
יפה. בניר, אתה החותמת.
אני זכיתי...
כן. מה עוד לא אמרו ואתה אוהב?
אז שוב, אני פחות יודע לתזמן בדיוק את הסקטורים, אבל אני כן אגיד ככה. לגבי, התחלנו עם AI, אז יש היום בעולם בעצם מרוץ חימוש עולמי, גם בתחום של AI וגם בתחום של הצבאי. ובתחום של AI יש גם חברות סמי-קונדקטור ישראליות שנהנות מזה ויכולות להמשיך ליהנות מזה, כמובן שהן לא זולות, אבל זה מבטא את פוטנציאל הצמיחה קדימה והוא משמעותי. ובתחום הביטחוני הצבאי, גם פה ראינו חברות עושות תשואות מדהימות, יש מלחמות בעולם, אבל אני חושב שגם פה הסיפור לא נגמר. ברור לכולם שההשקעות בעולם הביטחוני, גם בארצות הברית, גם באירופה, הולכות להמשיך לצמוח בצורה מאוד משמעותית בשנים הקרובות, וחברות ישראליות היום מביאות לשולחן מה שכמעט אף חברה בעולם לא יכולה להביא, ניסיון מבצעי מוכח, עכשווי מהשטח, וחלקם גם בתחומים שמאוד צומחים, אם זה רחפנים וכל מיני טילים משוטטים ודברים מהסוג הזה. אז אני חושב שהסקטור הזה עדיין מעניין. ועוד נקודה, פחות סקטור, אבל אם מסתכלים בכלל על מה שקורה בשוק הישראלי, אז ומחפשים עדיין תמחורים יותר טובים, אז אפשר למצוא את זה בחברות שהן יותר שורה שנייה, שלישית, חברות יותר קטנות, ומעניין לראות שהחברות, נגיד, שנכנסות למדדים העיקריים, ה-125, איזה שינוי הן מקבלות במכפילים ברגע שזה קורה. וזה אומר שאם אתה יכול למצוא מניות שהן עדיין לא שם, אבל הן מעניינות להשקעה, ואתה קונה חברה טובה שהיא עדיין לא במכפילים מאוד גבוהים, אז ברגע שהדרך שלה תמשיך קדימה, אז תקבל גם את התשואה שהחברה הזאת תיתן לך מהצמיחה שלה, וגם את ההתרחבות מכפילים, וזה יכול להיות מאוד מעניין.
טוב, תודה רבה לכולכם. תקווה לצבע ירוק, אני רואה פה את הירוק, all over, אז שזה ימשיך ככה, אמן. תודה לכם.
My name is Ido Pollack. I'm a partner at Eisner Amper, which is a top-tier firm offering accounting, tax, and advisory services. We have a strong focus on with hedge funds and private equity, venture capital, and we provide tailored solutions like fund administration, audit, tax, and compliance Strategic Advisory. Our global presence across the US, Cayman Islands, Israel, Luxembourg, and most recently our office in UAE and Dubai ensures we can support our clients in diverse markets and regulatory environments. With over 30 colleagues right here in Tel Aviv, we currently have the largest financial service-focused practice in the country. So it gives me great pleasure to announce the next panel. I'm going to call up, this is going to be Allocator Insights, Macro Trends and Allocator Plans for 2026 and Beyond. Where is this smart money going? I'd like to call up Thomas Madrason from Marex.
Well, good afternoon, everybody. It's great to see that some of you have remained before lunch. But yeah, super happy to be here for the Allocator Insight panel. Thank you to the team, obviously, at the conference. I think it's been a really thought-provoking, insightful session, and hopefully we can provide more of that. My name is Thomas Margerison. I lead Middle East Capital Introduction for Marex Prime, based in our Dubai office. For those of you that aren't familiar with Marex, we are one of the leading non-bank financial institutions across the globe, NASDAQ listed, almost 3,000 employees, 40 offices, including an office in Tel Aviv that is growing. In terms of prime brokerage, look, we're one of the leading mid-market prime brokers. We have an incredibly experienced outsourced trading team, a large international capital introduction team, and we play a significant role in supporting emerging hedge fund managers across the globe, including those in Tel Aviv and Israel. Super excited to be moderating the panel today and to be joined by two, hopefully three, leading voices in the local family office and institutional scene. And genuinely, this is always my favorite panel of a conference, and today especially, look, these guys are actually going to share some insights in terms of, how they approach hedge fund investing, how, in a difficult fundraising environment, hedge funds can actually stand out, and also what's on the 2026 shopping list for hedge funds. So before we kick off, I'll leave it to our panelists to introduce themselves. Yeah, please.
Hi, everybody. David Ram. I'm the Chief Investment Officer at Gold Rock, which is a multifamily office in Israel, servicing clients in Israel and abroad as well. We've been around since 1999. We've been investing in the hedge fund space since about 2010, I would say. I lead the investment activity across all asset classes, and we're a team of 16 people in Modine. Come visit. And that's it.
Hi, everyone. Yoav Kaspi, I'm the Deputy CIO for the Clients Capital at Phoenix Insurance. Phoenix is probably, as you know, largest asset management company in Israel. We have north of 500 billion shekel in AUM. The majority of that is long-term savings, essentially pension, life insurance, provident funds, education funds, things of that nature. Most of my career I've spent in listed markets globally, equities, credit, FX, and rates. Today I also sit in the allocation team, looking across assets, and also considering hedge funds.
Vered Ben David, I'm the CEO of Ravit Family Office. We are a multi-family office based in Tel Aviv, doing global asset allocation, administration, taxation, and of course, second generation and all across the family needs. Regarding hedge funds in general, we see hedge funds as part of the global asset allocation. We speak later about what we expect and our purpose in investing in hedge funds. In Israel, regarding Israel and Israeli hedge funds, many years I said that it's more of a private fund with more freedom and for the manager to bring alpha. But now we have, I think, quite a nice experience of years and several or many managers in Israel that prove that they can bring alpha, beta, and they are real hedge funds. So.
No, thank you. And I guess you've already started the sort of the first question that we were going to discuss. Is very much like how our panelists approach hedge fund investing, and in terms of what is the role of hedge funds in their respective portfolios. So is it more for an absolute return focus, more for enhanced returns, or more as a bond proxy, maybe a fixed income alternative? So David, if my maths is correct, you've been investing in hedge funds for 15 odd years, so maybe you can kick us off.
Sure, absolutely. So first and foremost, we don't look at hedge funds as an obligation in terms of the asset allocation. It's more of an added value to the asset allocation. So the goal of our hedge fund portfolio, and I think every hedge fund portfolio, should be delivering uncorrelated returns. That's first and foremost. Second place, we try and make sure that we're kind of delivering better than a 60-40, typical 60-40 portfolio. So I want to outperform a typical allocation. I want to deliver it in a relatively liquid fashion, and I want it to be uncorrelated. That's the goal. So if I can find it, I'll invest in it. If I don't find it, I won't. So it's more of a bottoms-up approach in terms of how we invest as well. What's important to us in terms of investing as well is to kind of get in early. It's really difficult to be able to build, I guess, a network and relationships within that broad international market, and then be able to identify spin-offs or different types of strategies that are coming. Because getting in early is really an important way to capture that outperformance in the early days of a fund's life. So that's kind of how we do it. That's how we think about returns.
Thank you, and I'm sure that's music to the ears of some of the more emerging managers here. And Yoav, from an institutional seat?
So our approach is a bit different, I would say. I'll start by kind of introducing the overall consideration scheme. So in general, the asset base for us and for our competitors is really large and growing. Right? So we all know that the population is relatively young. So demographics work in your favor in general. You have, at any given year, at the start of the year, you can expect anywhere between 5 and 10% growth in your asset base just from demographics. On top of that, you have market returns, and you have, if you're doing your job well, you may also get some inflows from some of the competitors. So our first and biggest task, I would say, is to deploy capital. Right, that's kind of the thing that we're looking at first. So for our perspective, the biggest perspective would be to look at how to get access to the right betas, the right type of assets, first of all, and how to do it efficiently in a sustainable manner. Second, the second consideration, I would say, Israeli institutions are relatively thinly staffed, I would say, in general, right? It's not, so the average asset management company like us would be 100 people, more or less, which sounds like a lot, but considering the asset base, it's not huge. And so we rely, and we like to rely on third-party managers that we can trust and believe in their process, thesis, etc., to bounce ideas to discuss. If we see that they've communicated that they like something, some sector or something like that, or if it's an idea that we have. So we like sharing ideas. We don't necessarily like. I think was also mentioned in the previous panel, right? The biggest focus is to generate the actual exposure rather than maximize per unit of risk returns. So finally, so those 2 points in general come up with, and with the idea that we don't have a big allocation to hedge funds, right? It's big in absolute terms, but it's, as a percentage of our portfolio, it's relatively very small. couple that with also some constraints on costs. So we are regulated entities in which, it's hard for us to pay management fees to third parties. So somewhat constrained. So that's an overall scheme which essentially says that the hurdle for us investing in hedge funds is relatively high. So where will we look at it is exactly in those places where we feel we can get some added benefits from our exposure. So if it's someone who's a specialist in a specific niche that we like, great. If it's someone who, we know how they think and maybe they can compound our force, great. But we're unlikely to invest in kind of, the typical black box that was also discussed, the kind of the multi-strategy large hedge funds, which essentially you don't know what they hold. That's unlikely to be our core kind of go-to-market type of point. So I think that's kind of the biggest considerations, I would say, for our allocations.
Thank you. And Vered, anything that you would add from your family office seat in terms of, what the hedge funds do in your client portfolios?
Some of it is similar for what David said, because first of all, for us is to balance the portfolio. It's private. We have limited sources. So first of all is beta. We want something that would be less correlative and hopefully would bring alpha to the portfolio. But beta is first in that sense. Maybe I would add more outlook to something that is, and then because global hedge funds is much more difficult for us to assess, to reach, to follow. So we tend to go more to multi-strategies. Or use external provider that do the research for us and the follow-up wherever we're going to specific funds. In Israel, I think it's worthwhile talking about it because it's a process that, at least in our firm, we feel. In a sense, we feel that, first of all, the industry has grown, has matured. In a way, it still has a way to go. And in a way, it's for us, it's a kind of a replacement for active portfolio manager for Israeli assets. True that it's a little bit more expensive, but compared to the benchmark and the risk parameters, there's quite a lot of funds in Israel that did deliver. So it's very interesting. I think the industry is changing. Some of them for us is quite new, so maybe we test a little bit and it would take more time to get to know and to feel the comfort, but with some we do feel comfort. Mm-hmm.
Thank you. And then I guess to you, David, and sort of what Vered has mentioned, there is sometimes a struggle to maybe source the correct managers on the ground here. Is that something that you struggle with, and sort of how do you overcome that?
Yeah, so we are global investors, first and foremost. So we do invest in a couple of guys in the Israeli market, but they're doing Israel. They're not doing international investing. So the guys that we're investing in Israel do Israel. The guys that we do invest in the U.S. the U.S., et cetera, et cetera. In terms of how I source, it's a lot of work. It's a lot of work to get out there, to go to events like Merrick's type cap intro events in the U.S., meet new managers, work the phones, talking to managers about who's leaving, who's not leaving, why not, talking to multi-strat funds like the platform guys. Always those platform guys, they make a ton of money, and then they get frustrated, and they leave, and they spin off and start their own business, and then they go back to the platforms usually afterwards when they realize how hard it is to run a business. So it's really important to be very plugged in to the ecosystem if you want to invest in that asset class. Mm-hmm. And we've chosen to invest in that asset class. I would say on a contrarian perspective, we have two contrarian views generally in the hedge fund allocation. One is, I know there's a lot of fee sensitivity, especially in Israel. People are very sensitive about paying high fees. I like when my managers get rich. That's actually a really good thing for us too. There you go. So I don't put a lot of pressure on saving a couple of basis points here and there on managers. I don't care what country they're in Israel or not. I want them to make money. I want them to succeed. In Israel in particular, I would say it's hard because in Israel it's not so scalable. I often invest in quite scalable strategies. You know, I can invest in a manager that's $200 million, but I know he's going to be on the way to $2 billion in the next few years. In Israel, you can't really do that. So it's even more important for my Israeli managers to make sure that they're making money. So that's one contrarian perspective, which I think is really, really important. The other one is on the multi-strat side, people are against, they're for. I'm a big fan of the multi-strats in some aspects because at the end of the day, what those guys are doing is they are, in principle, identifying pure alpha management and then leveraging the hell out of it, unfortunately, but you're leveraging a lot of that to generate a high level of return. And the pure alpha elements of that strategy has delivered above S&P returns for about I might have a decade, but about a decade actually, at a much lower risk adjusted basis. So in terms of actually getting what you're trying to get at in a hedge fund space, you know, they're getting a lot of money, they're delivering high levels of alpha, so it's adding quite a bit of value to the portfolio. So those are my two contrarian perspectives on the sourcing. But sourcing is really, really a big challenge in the space in terms of meeting the right guys. It's a people business at the end of the day, and the people that run a hedge fund are running a business, hiring, firing, you know, the whole business, and they actually have to know how to be a CEO and not only be an investor. And you got to make sure you're diligencing that aspect that they can actually run a successful business.
Thank you. And sort of flipping this a whole 180 from allocators sourcing to emerging managers being found. Obviously, hedge fund assets are at peak sort of $5 trillion, but it's a lot of the big guys, the $1 billion plus, the multi-strats that have raised this money. So would love to hear maybe Yoav as someone that actually launched a hedge fund in a previous life, and I guess you've already touched on it a bit, but you know, how can a smaller manager stand out amongst the crowd and differentiate themselves, I guess, outside of performance?
Great question. I think one, obviously this conference shows that the local industry is quite interesting and there's, you know, a lot of growth potential here, especially, you know, unique strategies. But from a emerging manager type of perspectives, we actually like emerging managers. I think historically that it's been shown that, you know, large funds have difficulties replicating historical trends. Now, obviously, I don't know if that applies that much to the multi-strats, you know, of today, but in general, I do believe in the model that, you know, relatively a successful portfolio manager can really succeed if he's nimble enough, can come in and out of things that, you know, for our portfolios we couldn't do, for example. So a lot of the times that's a good idea. Now, how to reach? One, come up with good ideas and, you know, make sure you put them in front of people who make allocation decisions or investing decisions all day. So, I mean, this is our day-to-day. Managers that we speak with who can, I'm sure, can share that before I talk about anything. I want to hear what they're actually, how they're thinking about things. Make sure there's a, you know, there's a kind of a fidelity of views, that it's similar in the way people think, and there is something special. Now, in public markets, a lot of times it's hard to come up with something special, but, you know, I think that's kind of, you know, you want to get the managers wealthy, great. Let's find out why they're unique. Otherwise, it's not as interesting in my view. It's more, you know, I can get that access from, again, beta. So show ideas.
You would be open to co-investment opportunities from us?
Yeah, so 100%. So this is essentially the way we would typically work, is if there is a manager that has an idea that wants to share, that someone, again, not everyone I'll listen to, but if it's someone that I know, you know, has a track record, or, you know, has been with person X or etc., has shown his capabilities, I'll take the meeting. We'll talk about the ideas. It's like almost like an interview in a sense, right? This is how I interview people. I ask them, pitch me an idea. Tell me, why is that good? And it's the same thing. At the end of the day, it's an allocation to someone who's generating an idea, whether or not he's my employee or he's working at his own shop and gets management. It's the same economics. So that would be my biggest advice: is don't be afraid to kind of open up. Again, this is not about it. It's about how we leverage the overall idea generation set that's in front of us. For us, again, thinking about that constraints from management fees, etc. It's a way for us to lower the overall economic toll that hedge fund investing has. So if, just give an example, instead of paying 2 and 20 on $1 million, maybe you can put 2 and 20 on $500,000 and actually invest alongside the managers at zero fee and carry, and that works out well for us. Now the manager gets, I think, a sizable investor. We get idea generation. I think it's a win-win. But it's to get to that point takes a lot in terms of confidence building, trusting the other side of that transaction, which is not easy.
No, for sure. And Vered, anything that you would add from your seat on how a smaller manager can maybe stand out?
There we have a kind of a problem, because we are the trusted people for our clients. So they need, when I'm facing them, they need me to be sure. Now, it's a problem, it's a paradox, because a young or a new manager would come and he says, okay, the strategy is interesting, the guy looks very trustable, but I don't really, it's a gut feeling, not more. So apparently it's not enough for us to come with the clients. Now, when we do come with the confidence, sometimes we lose something on the way because we come a little late or later, okay? And we missed a year, 2, 5, I don't know how much. And we didn't manage, actually, I'm saying it very openly, to find the right mechanism how to get the comfort, unless a specific client likes or know the guy or likes the the strategy, how to do it efficient, I must say.
No, thank you. And then sort of changing gears, sort of the macro, micro markets. I guess if we look at a global perspective, most markets have been on a bit of a rip for the last couple of years. Mr. Trump's tariff volatility has sort of subsided, but headline risk now is more unemployment, AI, bubble or no bubble. But then equally, Q3 earnings were very good. Obviously, interest rates are heading down. So just given that backdrop, and as we sort of move into 2026 now, would love to hear, as it pertains to hedge fund strategies moving forward, like what's on the shopping list? David?
Sure. That's King Trump to you, by the way. So, I'm just joking. He's not going to run again, don't worry about it. But I think hedge funds actually are probably one of the most important mechanisms in a portfolio, I think, for 2026 and 27, arguably, because as an asset allocator, one of the ideas around asset allocation is to understand how all the pieces of the allocation talk to each other. And the idea is to make sure that they don't all flow in the same exact direction. So if things don't go well in the stock market, you have some protections, et cetera, et cetera. What we're noticing in our portfolio, and it's probably a lot to do with the AI revolution, that a lot of our components in the portfolio are pretty correlated to AI, unfortunately, or fortunately. We'll see how it goes. But it could even be real estate. It could be the bond market, the equity market. It could be private equity, of course, venture. All the pieces of the puzzle are pretty much betting pretty long on the AI revolution, which means that we're looking for ways to add value to the portfolio in case it doesn't all work out swimmingly well with the AI market. And having an uncorrelated return stream, especially in a relatively liquid format, if it's purely uncorrelated, if it's truly differentiated, that gets very, very important and very interesting. So we're thinking about ways to take advantage of those kinds of strategies moving forward. Specifically, yes, I mentioned I like the multi-strats, which of course are helpful, but we prefer single risk managers typically, either sector focused or taking advantage of certain markets that are naturally inefficient. I mean, just because we're in Israel, I'll say in Israel, it's a great example of that, where the Israeli stock market, it's not very large, it's not very traded. There's a lot of inefficiencies that are naturally embedded in the market, allowing for relatively smart people to do quite well over a long period of time. So those kinds of characteristics that we look for in either a sector or a region or a company size, it may be. So we prefer single risk managers that could be differentiated moving forward. So we're looking right now, for example, we have some money already in commodities, obviously. It's a good example of a space that we've done quite well, where we sourced a manager that spun out of a multi-strat, was seeded by somebody in the energy market from Texas. We waited a couple of years until he opened the doors, and we were one of the first investors after he opened the doors, and we've been with him for a few years now. He's done quite well and scaled really, really nicely. So those are the kinds of things that we look for 2026.
Thank you. And Yoav, anything from the Phoenix sort of house view?
Yeah, I mean, so I guess for us it's typically a lot of the things that were said, I think we share. It's more single assets rather than multi-strategy, for example. We don't like closed, black boxes that we don't know what's in it. We don't like quant managers as much because it's just more difficult to have a justification conversation about why we buy X or Y, where it's, this is what the model shows. So typically those types of investments we would look less to, which ends up leaving, I guess, equity long short with the comment that I made earlier, it's mostly a long bias type of strategy. Credit, similar. And I mean, macro, it's unlikely that we do anything massive. Again, we have a very big macro portfolio, so it's, it can always add value there, but just, it's not necessarily something that we're looking at. We're looking for idea generation at the end. So anyone that can assist in that perspective, bring it on.
Thank you. I think Vera, probably last.
I think long short, it's still the best favorite for us. I think it's very relevant today, especially in the areas that more active, like AI and all the circumstances. Energy, and I think because of the political and let's say the new, generation of leaders in the world that we have, we started to think we didn't do nothing but commodities again. So, and this is something that hedge funds, it's a part of the way to do it, wherever we cannot do it directly.
Thank you. Have a big red flashing screen saying our time is up. So, I mean, thank you to everybody in the audience for joining today, and obviously a big thank you to our panelists for
Thanks, guys.
Thank you very much.
Fantastic discussion.